All right. Peace, power, and profit. It is Money Monday, and I'm on for a hot, brief second, right? We're going to make this very quick and direct because it's about the markets and always about the markets. When we come on, it's about the markets, right? When we shut down, it's about the markets. When we, prepare and plan for the next day, it's about the markets. For those, of us who are constantly surrounded around the markets, well, that's why we say it's about the markets. All right. With that being said, again, thank you guys for tuning in wherever you may be around the planet today. I know you may be knee deep in investing in the market, working, doing whatever, conquering your goals. I want to send you guys a shout out today, a special salute, from our little ecosystem on the map here. Again, salute to you all today on this Money Monday. Hope everybody's having a great day and had a very productive and positive weekend of rest and relaxation. So we can take some of that same energy into the week ahead, coming out of last week, especially for the investor class out there, the trader class out there have witnessed what the market was, seething to do, regardless of all the speculation, whether or not the CPI numbers were leaked and caused the market to sell off at the end of the day Thursday, which culminated into what we got Friday. I beg to disagree and just say, you know what? It was already forecasted, right? It was already forecasted that we was going to have the kind of market that we got Friday because there was no way you can beat back the genie in the bottle in terms of inflation. No matter how much Wall Street sings the song that everything is all clear, no matter how much they can try to convince you that they know more than the organic values of yields rising, commodity prices, scarcity value, they're rising. It's just like couldn't make this stuff up, right? How bad they've been at calling this market. These guys have PhDs and all this bachelor's and master's and went to these prestigious colleges and universities, and yet they can't make a simple judgment call on natural inflation, right? It's pathetic, right? But you guys can, right? Why? Because, we are more on the ground. We're humble. We're honest. We're direct with learning how to parse, through the straws, the weeds, read the tea leaves, if you will, and come to a more, solid conviction on what we should be doing, right? So thus far, those of us who have hedged since 480, the all-time high of the SPY, all the way down to where we've clipped today and made a new low, a new 52-week low, mind you. Today we made a 52-week low in the S&P 500. Shout out to you all, right? Who dare to defy the odds of the Wall Street pumpers, or if you will, notwithstanding that we have long-term portfolios out there as well. Yes, we do. However, we're not going to play the blame game or the blind game in the same breath. We're going to make sure we make conscious decisions based upon data, primary sources, good constructive strategies put in place, and let the chips fall as they may in that regard, right? But all this just trusting it just because some TV analyst said, trust me, and the bottom is in, bro, and buy the dip because there's nothing else out there that you can invest in. Well, there's always something you can invest in. More time. You can sit patient, right? There's a time to buy. There's a time to sell. There's a time to sit patient, or in my case, go fishing, right? Go fishing, meaning just go do something else constructive and let the market weed out all these old quote unquote bad actors. And so thus far, we've been very solid in being able to do just that. So shout out to you, to you all who definitely, trade and live by that sword, so to speak, right? You were very patient. You let the money come to you. And because of that, you're being rewarded, wonderfully right now. And you will continuously be rewarded because you live by the game of due diligence and discipline equals dollars, right? Due diligence and discipline equals dollars. As simple as that, right? You're not going to get around that if you're an investor or a trader. You have to realize that, right? Patience is a virtue here. and also being aggressive when necessary is also what, right, a virtue too. So with that being said, having balance is like literally larger than life in the investment world. Being disciplined is literally your saving grace. And the rest is just what, waiting to see what other traders are going to do, watching them, capitalizing off their mistakes, right? When they capitulate, that's when you aggregate, right? When they capitulate, you aggregate, you get the bag, right? So today was no different. We were very, adamant about, what we was looking for as far as today, right? We closed out actually Friday with a message concerning how we were thinking about swinging, more risk on to the downside of, in this case, in our put buys. And again, just being, convicted by the data, the trend, the outflow value of what the sellers were, brandishing, obviously, even through the option flow charts and flow chains or whatever, just signaled that it was a great opportunity to swing more puts into today. And lo and behold, they paid off. Now, of course, there's always somewhat of a, enigmatic moment, because you don't know exactly what's going to transpire over the weekend, because we still have some things that are very underlying, that if the market got their way and these things were to abate, then yeah, that would give the market an excuse to rally. But I think for the most part, we've pretty much nipped all the, the pumping talking points, out of the market as of now, right? So now they just have to, be, put on their big boy pants and big girl pants and just trade honestly based upon what they can read, and how they should hedge, I should say. So with that being said, again, peace, power, profit, everybody. Once again, thank you for tuning in. Happy to have you here. We're just trying to get through this little power hour session here of the market and seeing, what, comes, on the late end or the back end, all right, the back nine of the market here, after we've pretty much demolished the front end of the market. Again, just traded the market with precision today, speaking for myself, and I saw many others who were able to, post, their gains and how well they were able to, again, aggressively trade the market and benefit from it. So shout out to you all today, guys. All you guys who've made it, a conscious effort to be, patient and let the money come to you. You benefited greatly today. Peace, power, and profit to you. Peace, power, and profit to you, right? And that's what it takes to be skilled in this, because, you're never going to be consistent if you're all over the place. If you can't collect your thoughts, if you can't make executive decisions, which you're doing every day as an investor or trader, you're making executive decisions. You're not guessing. You're not throwing grass in the air and letting the wind catch it and saying that's the way you need to go, right? That's not what this is about, right? There's an aspect of luck that may come along with this, but it's very minute once you realize the rules of engagement, why you're here, and what you're trying to accomplish, right? Technical analysis, fundamental analysis, and investor sentiment. Simple as that, right? And all the nuances underneath that, right? So we're big proponents of those values, and we stick by those things. Why? Because that's how you get to the bag, right? That's how you get to the bag, right? So again, shout out to you all who were able to do just that, right? So shout out to the family coming in the building already. We have Miss Monica Lamb in the building. Shout out to Miss Tri-City Visionaries in the house. Go subscribe to her YouTube channel. Don't hesitate. Go do what you need to do and support your tribe. Go subscribe to Miss Monica Lamb's channel. Go subscribe to our over Chris Woods YouTube channel as well. He's doing a phenomenal job in bringing some good data to the table. So we're excited to have, again, people who are doers in this game and, who are very consistent in what they're trying to accomplish, right? Shout out to him as well. Shout out to our family Ramirez, Seven Heavens in the building. Shout out to the family always coming through as well. We appreciate you as well. Our family Yoda in the house. Shout out to you as well. Peace, power, and profit to you as well on this Money Monday. Shout out to our brother Iori in the building. Iori 666 in the house. Shout out to you as well. Always happy to have you here and what you bring to the table. Everybody from the camp, from Dollar Will himself, everybody who tunes in, be it Facebook, be it Twitter, be it wherever, we appreciate you. Why? Because again, we're just trying to, have our band of brothers and sisters as well, right? Everybody have their own little cliques. I'll just pretty much derived around figuring out how we can get a bag, right? So it's all about the bag, right? And why shouldn't it be about the bag, right? We have enough things that distract us every day. We've already had enough things to have distracted us for a lifetime. And I think right now is a great time to get serious about figuring out what's the next move, right? Let the next move be your best move, if one would say, right? And that's what we're definitely comfortable in planning out that next move, right? Because again, we're patient and we're trying to be very precise as possible, right? Even though this is not an exact science, but we definitely put forth the greatest primary source, the greatest research methodology we can that we can muster individually to get exactly the result that we want, right? Shout out to brother Rich B in the building and came through already. Shout out to the New York fam in the building. Shout out to him on this Money Monday as well, right? As you guys are going into this power hour, 15 minutes in thus far, you're seeing the SP 500 here. Definitely take a he hold back into the downside. And this is pretty much, what you get when you have that kind of level of demonstrative sell-off in the markets where you can't necessarily get that, that equitable balance that most people were used to getting because the Feds were so accommodative. That ship have sailed until it comes back around again. Until now, you're up against quantitative tightening, which is constant, definitely on the books now, and should be a constant, additive to your thesis. To just note that we're leaving $47 billion, behind of easing, and that money is going out the door, right? It's being retracted, I should say, back into the Federal Reserve, right? So no more just dumping money into the market, just try to save everybody, right? You can't save, what necessarily does not need to be saved at this point, right? Because why? There's a moment where you have to find balance. And right now the Feds have been doing a very bad job in balancing out their mandate, right? And so because of that, a lot of people are suffering, be it the value of the inflation being the elephant in the room, right? Shout out to Brother Rams in the building as well. Shout out to you as well, right? You say you got your herb sea moss in. All right, that's what I'm talking about. Let's go, right? Health as well. Shout out to you as well. And so again, like we're speaking about, the elephant in the room is inflation. Until we get inflation under control, expect to see markets capitulate. Expect to see people panic. Expect to see people who are not comfortable in their discipline. Expect them to make a lot of premature decisions. And so as we've always been, or I should say this, the way we've trained ourselves to realize is that, you don't panic when it's organic. I repeat, you do not panic when it's organic. And the data that we're getting now from the yields rising, from commodities prices, fluctuating to the upside, those are organic readouts that the Fed themselves have over-accommodated themselves into the point where, it's time for them to back off, right? It's time to let the market sink or swim on its own. No longer should you just hold its hand through every aspect of an economic downturn and expect that the market is going to constantly be, a forever bull, I should say, when necessarily there's need to be moments where the market needs to calm down. So with that being said, again, we welcome when markets do pull back. Again, no one wants to see their portfolio take a small hit or swipe at their portfolios. But however, again, giving credit to where we've come thus far, dealing with a pandemic, dealing with economic, slowdown, dealing with, again, this new value of even, the monkeypox, if you will, and just getting our supply chain, affairs back in order. I think we've survived, quite well thus far. Again, let's put some context to that. Just going back to 2018, we can, act as if, we haven't benefited and we're not still doing pretty well as a marketplace. It just seems like it hurts a little bit if you were buying up near the 470, 460s, 480 area, which a lot of us were not, putting a lot of good money to use at that point. We were more so trading as opposed to long-term investing because we saw a peak coming, right? We saw the inevitable playing out. And that was a scenario where we were getting ready to hit, peak liquidity. You had to have some level of production to kind of equal out all the printing that was coming by way of the Feds. And so we were just very cautious as we were supposed to be. And a lot of people probably push back against that narrative, that thesis, say, well, why would you sit on the sideline? What else are you going to invest in? Well, you invest into to the backside of the market, right? The downside, you hedge, right? Why put good money on a potential overly supplied asset, right? It had hit its peak value for most part. A lot of these stocks were sitting up over 100+%, 200+%. I mean, we know the list, right? We know the band of what, the thieves out there, right? Who are overly priced and overvalued. And it was just only, it was just only obvious that they were going to pull back at some point. And so that's what we're getting now, where the market is starting to rebalance itself. It's starting to weed out, a lot of that, froth, if you will, and excess. And let's, get back to a place where we can get some new investors into this marketplace who are destined to, put some of their skills to test, but at a lower price for once, right? At lower PE ratios for once. And I welcome that. Why? Because if these people who are the 1%ers who are, super mega wealthy, right, that made trillions of dollars during the pandemic by way of the Federal Reserve being very accommodative to their value, right? All right. Why not let the little guy eat for a change, right? Why not let some of these assets come down at more, equitable rates where they can get in and partake in potentially the next potential bull rally, right? As of now, we got to weed through all the bad data. We got to flush out, again, all this bad policy, right? Bad read on the markets coming from the Federal Reserve, the Treasury, the Biden administration, right? We got to get a lot of that bad, again, economic read values out of the market. And when that happens, then we can return back to some kind of form of a prominence where the dip by thesis is golden again. And until that, those things somewhat, happen, I'm comfortable being more so just, trading, into, opportunity, right? Be it up or down, doesn't matter to me because I trade both ways. But one thing I would not be doing is just, really putting, good invested, or I should say investable type of money into a marketplace that has a lot of weakness still left in it, right? So I will not be adding to a lot of my long-term positions. I have not in quite a while. I've been very, staunched about that. I have my levels that I already have in play that I would like to invest in when these companies get a little bit more cheaper. Until that happens, I'm not touching it, right? I'm not touching these stocks. And thus far, it has served me well. It has served me quite well. And just looking at the S&P 500 again, guys, we already know, fair value literally for the S&P 500 sits at around, I guess even if you only want to put it on the daily side, it's at between around 350, possibly through a 330, 320 area. That's fair value for the S&P 500. A lot of people may not want to deal with that, right? A lot of people don't want to get square that, but that's just the reality, right? Because, what are the use of having, indicators that tell you what a fair value, equitable PE ratio should look like on a stock that's trading on a 52-week time value, given, a lot of the macro headwinds that we're dealing with anyway. But just say, hey, we can trend at around 350, 330, whatever. We can get back to a place where we weed out all these bad actors. Then possibly we could do some, do a little bit of nibbling there. But who knows, right? Who knows we even going there or not? I don't know, right? Seems plausible, but we just don't know. Why? Because, when markets are skittish, anything can happen, right? There's still a lot of money sitting on the sidelines. A lot of people still going into cash. But again, for those who've already tried to buy the market, on the way down up around 450, 460, they just been getting ran over, right? Down when we hit that, the 410 based upon, the whole, Russia-Ukraine scenario. Those people who bought that, that dip and thought the bottom was in at 410, ran the market back up as well, and they got ran over again, right? I just couldn't make this stuff up. For every time they tried to buy this dip, with a lot of aggression and I don't know, maybe a little bit too much, cavalier energy, they've been run over, right? They've been run over here. I mean, brutally, right? Just been brutally run over, and it's kind of like a bloodbath out there. These guys are still out there trying to prove that, they can potentially call the bottom, right? But I'm not in the business of calling the bottom. I'm just trying to find equitable areas of where I see, money and, the liquidity aspect coming back in on a constant and consistent basis. Once we weeded out a lot of the bad economic data, then I can feel comfortable in buying this market, to the long side, that is. Right. But that's just me, right? That's just where I get my hair done at, right? As one would say, like Cat Williams would say, they're more than Cat Williams. That's where I get my hair done at. All right. So again, the market again, we've hit some crazy numbers today. Again, thus far, the new 52-week low on the S&P 500 sits at 375.09. Right. We're flirting inside the 375 handle right now as until the close here. We're roughly about 26 minutes here before the bell. And will we break that low today? Right. That's to be, determined at this point. But for the most part, we'll have to wait and see. What's going on, Brother Mathis in the building? We see you in the house. Peace, power, power to Brother Mathis in the house. Shout out to you as well today on this Money Monday. Again, shout out to everybody coming through, maybe watching and necessarily can't type. We appreciate your view. We appreciate your like. We appreciate your share. And we definitely appreciate your subscribe, right? Anything that you do to contribute here, we appreciate it, right? We're trying to get people excited about opportunity through financial literacy, through the value of equity markets, through the Forex market, through the crypto market, whatever. Asset ownership, that's the name of the game, right? We're excited about those things. I should say that. All right, so that's it. So let's look at this real quick here. I want to get the link out to you guys as well, just in case you guys want to come on the back panel here. All right, we'll get a little, little tribe time in as well. But I want to show y'all this real quick too. Just again, the extent of how, we played this market beautifully based upon, again, a lot of things that we were already kind of, prepping for, right? It's nothing new to us. We were already planning for this, right? Some people may be, kind of still spinning their wheels, but as of now, we were planning for this. I mean, as of now, again, we do have somewhat of a double bottom trying to build at around 375, 67-ish area, give or take there. Again, the 52-week low, as you see right here on my screen here, on my black box scanner here, we hit 375.09. So if we come take that area out there, of course, it can get a little bit more slippery to the downside. We do have levels already kind of primed and planned out. Given the fact that, we've been drawing our levels pretty well. We've been pretty accurate, I should say. And that's not, too now on horn, but sometimes we got to give ourselves credit because we do work hard at this, right? But for the most part, all of our levels been hit, right? And so now we're just playing the game of, we'll see where, Wall Street want to take this market, right? Do they parlay and try to, buy more time as they've been trying to do? Right? Or do they sell it off, right? Do we get that natural big flush down that everybody's waiting on, right? We know the capitulation flush is still yet to come. As we're watching right now, look at the markets flushing down, potentially want to go test that 375.09, right? This is until the close here, even though we got 30 minutes left, but we're still seeing more selling here on the back end. Look here. We're still flushing here as I'm speaking here. We definitely got more downside pressure here. So this is live, in direct, where this 375.09 may be tested here on the back end of the day. Who knows, right? Who knows? Let's look at this. Look at this on the on the full spectrum here, right? Let's go to the 2-day that way has that kind of 5-minute, 5-minute look there. So clearly here, down here, even though we had a wick off here, it's addressing it as 375.09, but we wicked off below that and hit maybe 374 some change. But as of now, we're holding, right? We're trying to hold, I should say, trying to hold. Now, given the fact that we've already kind of pulled back, roughly over, we closed down maybe like 2.5 Friday. So we're down roughly near around about 6% in 2 days. Chances are a lot of you guys' RSIs are very oversold, and it's just crying for someone to come in and buy the dip right on the RSI. Now, different time frames will give you different readouts. And we'll look at a couple of them real quick before the bell rings here. But just to kind of give you a little bit of, I guess indication of what you think the market may do. I was reluctant to kind of sell off a majority of all my swing puts, well into that flush down in the 375.09 region. I think they'll close the last one out around about 375, 60, 70, somewhere around there. All right. And then I turned around and bought retracement scalp calls, which were literally on the dime. I caught those things, man, like goodness. That was like one of the best dip buys I had caught in a minute. Rolled it back up above the 380 level. I wasn't even really expecting us to get, beyond really 379. I was just trying to play above 379, but we was fortunate to get above even 380. And I was able to close out, I bought two, close out one and held, the other one, in relation to it, see if we can stay above at least 370. I think I had set my stop loss for 374, right? That's the one that I have left. I have one left that I'm holding. Respective if we close at least above 375, I'll keep that trade on, right? Because I literally put it on right near the bottom, right around 375, but 30 somewhere around there, and I'm right back near that area now, right? So I already made money off the one above 380. I'm holding this next one just for a potential bounce or double bottom on the daily. If it holds, right, even though I put my stop loss at 374, I bumped it up since then to 374.50. And that's based upon if we close, below 375 and go test that area, I just go ahead and close it out. No harm, no foul. I already made money on the one for 380, right? And I just bought in already at 375.30 area. So I'm not really losing a whole lot there. Right? Strategies matter, right? Strategies matter, right? So as you see here, clearly we're definitely finna test the low. We've broke the low, actually. There we go. We made a new 52-week low. We've made a new 52-week low here. There you go. Live here on Black Box here, 330.13 on the dot. New 52-week low, 374.92. So the market is showing, hey, we're not done selling, right? They're not done selling. I'm not done buying puts, right? So lo and behold, that little swing call that I had left is, if it stops out of 374.50, I'll take that small L, and it'll be small, given the fact that, it was extended for Wednesday. But nonetheless, we've already banked on the bigger puts throughout the morning that we swung from Friday that are just bangers, right? I mean, bang out day to day for myself, bang out for a lot of you guys as well. I saw some of you guys P&L post that you was posted for all the trades you already took. Shout out to everybody who made a nice bag today, and who will continue to make, some nicer bags, if you will, going into the next FOMC meeting, which is this Wednesday, which that's also another topic we're going to discuss hopefully tomorrow more in detail. I get a little time to go live again tomorrow. We'll break down what potentially are the different, different things that are on the table that the Feds may explore for their next FOMC talking points, right? Which will matter because now everything that Wall Street pretty much planned for has gone haywire, right? They were just critically wrong in a lot of their reads on what they thought the Feds were going to do, even talking about a pause in September for rate hikes. Like, are you kidding me? With this level of inflation, you're talking about pausing? But nonetheless, the market rallied off of it, right? We was able to get the market off a 380 low, and they ran the market literally all the way back to 420, right? And hit resistance, at the kind of, consolidated around 416, which made for great puts, put buy, extended put buys if you're able to, like I was able to, play that level of resistance because they couldn't necessarily break above it, constructively and with conviction. I just put on more hedges there, and those puts, paid out quite well. So now we're at different levels here. We're planning for a new particular channel that we need to start trying to build here, wherever we may, this market may settle at some point. There are levels, I should say. Well, let's go to the bigger charts here. Let me go back over here real quick. Again, mind you guys, we are definitely in that kind of that proverbial level of potential capitulation zone that's starting to build. And a lot of traders who were not fortunate to really map out their risk right now, they're second win, right? They're second win. Like, man, I just thought the market was going to do this, right? It's all that I thought and I hope in them, and I was planning. I mean, well, if you were planning, well, how would you not have seen these levels, right? How did you miss all these levels here? Now look at the hourly chart here. See right here? This blue line was my pivot, right? That's why I sold majority of my swing puts, and I also bought swing calls back up towards the 380, right? Bought two, of course, whatever, sold one, held one, and then this one here just got stopped out. There goes the other one, right? The one that I had bought, I had to stop loss 374.50. It's out of there, right? So, I would not put that trade back on unless I see something demonstrative on the back end of the day. But as of now, we're, inside of this next channel here, as you see here, this red line here is rough around about 370-ish, right? 369 and change to be exact. Well, why do I have that level drawn? Well, let's go to the daily chart because I don't want to scroll through all this hourly stuff. Let's go see exactly why I have that next tranche or that next line or that next gun line in play, right? We have some chatter area, chatter here around 369.21, close to 369, right? Even though we have a little area here where around 370, we know whole numbers are typically natural support resistance areas or natural buy points for most people or sell points. But just using the chart here as a way to kind of play against all this, wicking and bullish, bearish engulfing counter values over here, we kind of mapping that around about 369, right? 369 region. Now, give or take, if we get a chance to get down there before the FOMC by Wednesday, that would be awesome, right? Why would I say, that would be awesome? Why? Because that would literally put the RSI, literally below 30. As you see right now on the daily, we're sitting at a 32 RSI, right? Not completely hitting oversold on the daily, but some would say we're oversold enough given the fact that we've dropped from 416 all the way down to 374, literally in short order time frame. Right? I would agree with that. However, we're still, playing the game of law of physics, right? We're still playing the game of, where are the, where are the people who've yet to capitulate at a point when they were buying a lot of what calls deep, deep in the money around 416, looking for 420, 430. And yet some of those guys bought those calls out, 2 months, out, right? 3 months out, 6 months out, whatever. And if they haven't already sold, which I would hope so, if they still hold on to any of that now and they've yet to capitulate those plays, then, whatever. I don't know what to say, right? Good luck, right? All you can say is good luck, right? So as of now, that's what we're up against here. Again, look at the daily here. Again, I kind of had my, I got my little bar down. He's not going to show up on the daily, but on the hourly or the weekly, I had it set where we kind of had that, that weakness of, resistance on the RSI kind of downtrending, and thus far we've definitely broke below 375, yet we've not necessarily hit that 30 on the RSI. I believe when that happens, and give or take, we may can go under just a little bit, but I've made this conversation relevant before. I think in one of my training sessions I said, if you go back historically and look at the RSI on the on the SPY, rarely have we broke below the 30 on the RSI without, it being some kind of egregious news or some kind of event that have caused it. As you see right here, going back on January 21, January the 21st, 25th area, this year, we broke below because we know what caused that, right? Last time we saw below 30 was during that time frame between the 21st through, let's say, the 27th. Right, we had a lot of downside, trending value of the market, which kind of flushed down here, as you see here with those candles up there. Squint it down, you can see exactly here. We flushed down from the all-time high from 480, literally all the way down to 430. Right, that definitely caused the market to go under these 30 on the RSI. Last time we saw that, or even close to 30, RSI was back on September 2021. Right, let's go back a little bit more. Right. Last time it was close to a 30 RSI, or we hit 30, was March 19th, 2020. Go figure. Right. What happened during that? COVID lows. Right. Historically, as you can see where I'm going with this, right? Rarely do the market get all the way towards the 30 on the RSI, especially on the daily, and not have some kind of value of a bounce. Most times we've gotten close and bounced right off of before we even got close to it. As you see it back on, again, September 20, October 20, 2021. Outside of that, you're not going to see an RSI on the, at or below 30 unless there's some really bad data that caused that. Again, 2018, last time, October 2018, we know what was going on during that point. The Feds were raising rates. And we were dealing with tariffs, right? That caused the market to flush out, capitulate, people dump. Again, same thing with 2019, right? We had, same issues, dealing with a lot of tariff issues with China, Cold Wars, whatever. But rarely do you see a market, in this case, SPY, get down to 30 RSI without having some kind of a hard bounce. So I'm just putting that out there again. Bird on the street, right? A fly on the wall told me, hey, you might want to keep a couple of swing calls ready when we see a 30 RSI on the SPY, right? And we're literally close here at 32.37 on the daily chart at this latest dump from 416 down to 374 as of now. And yes, we can easily go down and test that 370 easily, right? Easily 369 or whatever, right? Either way, however you put on risk, however you define your level of risk, we'll be ready, right? We'll be ready with some kind of form of, hedge in either direction, right? In either direction, right? Playing more down into the downside and potentially playing the bounce as well, right? Potentially playing the bounce as well, right? So as of now, again, the battle is on for 374 to close either above it or below it, right? We've already kind of broke this little trend line here. That was the line I used today to trade off of surgically, and it did very well. Given how the hourly chart, really set up today early on, where I didn't necessarily even have to struggle to sell my puts early on into that line. I literally pre-mapped that line out, way before I sold the majority. I sold one I think I saw maybe 2 of them almost like the first 1 or 2 minutes into trading, right? I think one in my Tasty Works and another one. I think 2 of them I sold into my TD Ameritrade. I had like a good little mess of little puts I bought into today that I swung. And then of course, I bought more intraday once I saw things starting to kind of show signs of more potential downside. But nonetheless, again, we had a great day in the market here overall. Really, ringing the register as we were, waiting for this moment to happen, right? We were saving that bacon, right? As one of our, favorite little sayings here, I am legend Will Smith. I was saving that bacon, right? I was saving that bacon, right? And here lies what we're doing now is what we're seeing more weakness, right? More weakness, right? The markets are not comfortable quite yet in having to face the fact or face the music that they got it wrong. They got it wrong on interest rates. They got it wrong on inflation. They got it wrong on the duration of how long this would last. They got it wrong on the commodities market, right? They thought, the administration was able to broker. I thought they would possibly be able to broker a great deal to deal even with the energy crisis, and that didn't necessarily happen. And so a lot of things that they were planning for, even given, before we even got into 2022, they got it. I mean, brutally wrong. Janet Yellen, Jerome Powell, Fed governors, most of the Wall Street analysts, most of the TV personalities that talk, a bullish game all day, every day, they got it horribly wrong. And just imagine how many people followed their lead. Moment of silence for them. Moment of silence for those people. And that's unfortunate. Why? Because they were just so convinced that these people know more, I guess. I don't know. But I'm like, well, I know how to read a chart. I know how to go pull up data from the BLS. All right, the St. Louis Federal Reserve website, right? The New York Federal Reserve website, and many other data places, data points that offer, conflicting messages. And so, if we were able to get these zones and levels right, why couldn't they get it right? Right? Moment of silence for them, right? So today, again, just another moment of us, where we get to pat ourselves on our back and say, we were patient. We let the money come to us, right? We let the money come to us, right? And so no harm, no foul with that. We're excited that we're able to be in a position to do that. And we're just doing our part to kind of stay above water, while a lot of people who refuse to hedge or take heed or be a little bit more cautious, right? They're just sinking right now, right? They say the goal of the game is what? Sink or swim, right? Sink or swim. Right. Hey, we're swimming right now. As of now, we're swimming. And there we go. We made a new 52-week low. There we go. New 52-week low, guys. 373.93-ish area. As the market continues to downtrend here into the close here. And this is crazy because we should have imbalances coming out maybe in the next 7-8 minutes, and we'll see if there's any buy signals values attached to those imbalances. Most of them probably going to be sales, right? But we'll see, right? We will see. But as of now, it is not looking good for anybody who is still trying to buy the dip, at least on the back end of the day, right? Not yet. I wouldn't think about it now because I did mine at a more strategic time at around that 10:30 region, right? When we caught that little bounce and got the little dead cat bounce, basically what it was, as you see here, clear as day, it's a dead cat bounce. And now we're flushing down here on the back end of the day here, right? New 52-week lows in the SPY, right? Who would have thunk it, right? Who would have thunk it, right? Well, we were planning for this. I got to keep saying that because it's just weird how people, act as if this stuff wasn't foretold, right? As if this stuff wasn't already kind of, pre-planned in a lot of ways, right? That these things were potential risks that you had to kind of assess. And we assess these levels of risk, right? We have training, for these moments, right? To help, our resolve, to help our conviction, to help us be able to be, comfortable and content and saying, if I still feel inkling of bullish value towards the market, I'm also going to turn around and put some, some downside protection on as well, right? You can do both. May I remind you, you can do both, right? You don't have to be a perma bear or perma bull. You could be both, right? And that's a good thing. That's duality. That's balance, right? You need that. That's Ma'at, right? Where we at? Well, Ma'at family in the building, right? You got to have balance. And so that's great, that we're able to, rest and knowing that it's okay to be balanced, right? It is okay to be balanced. So there we go, guys. So man, I should have blew it up a little bit bigger. I'm sorry. I had y'all on the small screen, right? Like, dang, bro, could you blow it up a little bit? Could you make it just a little bit bigger? All right. Let's get all this advertisement stuff out. We don't pay for trading view anymore, right? Used to, but not any longer, right? So there you go, guys. So that's what we're looking for here going into the close here, guys. I think we do have, again, a little bit more capitulation that needs to happen. What's going on, family? Everything in the building. Shout out to you as well. Happy to have you in the house. Again, everybody may be tuning in wherever you may be on this planet. Shout out to you as well today on this definitely Money Monday, as we're definitely down 4% right now in the SPY, and we're heading lower. Yeah, man, almost close to a limit down day, right? Right. That would be interesting. We get a limit down day, which I doubt it maybe at this point only 15 minutes left. But man, the market is rocking here to the downside with no holds barred kind of reality where, I mean, if you held your puts, into this last 30 minutes of the market here, man, you've definitely cleaned up, right? And truth be told, I have no other puts left. I closed out all of them, which respectfully I was supposed to, right? I took profit into levels that I had in play, right? Now, granted, I should have bought maybe one or two more when I thought about it. When we got above 380. First thing came to my mind was, hey, you might want to put on just another put or two to hedge against the little two calls you have, right? If you're gonna sell one call, at least put on one put. That's been my game plan for the most part, and it's been working, right? But I literally missed that opportunity to put on a put above 380 because I got busy, of course, moving around, and that's just the game, right? You can't get it all, you can't make it all, can't catch it all. But as of now, I am sitting patient, right? I'm sitting patient. Now, what I did do, I did buy me a couple what they call lotto puts for some earning plays, right? I do have Oracle. Oracle has earnings this evening here on the after hour session. I got a put. I bought a put into Oracle, right? Transparency here, right? Into earning, given the fact that they just made a big acquisition recently. And I'm pretty sure knowing Oracle, when the markets get very thinned out and weak, Oracle's biggest game plan is that they do a lot of buybacks. Well, after this latest acquisition that they put out, or that they just literally finished, I should say, that closed, they don't have capital to do a buyback, and so they're gonna have to beat organically, right? If they're gonna beat their earnings, they're gonna have to beat organically, right? And I'm just betting that in this case, if you want to use that terminology, that based upon that, a lot of other factors that I used, of course, to figure out whether or not Oracle was going to be in a position to potentially bail themselves out this quarter, given that the cloud business itself has been very weak, because they're in that space of the cloud computing as well. Oracle is no newcomer to the block. They're a very old school company, but again, they have been late in their acquisition model, right? They're just not starting to do acquisition in the worst time during economic downturn of the marketplace, right? Now they had cash that was sitting on, but they could have made those acquisitions a long time ago and benefited from some of that revenue value, letting those assets kind of play out over time, right? Given at least 2 or 3 quarters. So there's a lot of other things too, of course, but I think those two main factors lead me to feel a little bit more convicted to buy puts on Oracle. Now I could definitely be wrong, and all this stuff go right, and they may just be in a position where they can eke out some kind of I'll maybe get in line, come in with a good baseline guidance that they the latest acquisition, when it plays into their revenue stream, that Wall Street says, okay, we'll give you guys the benefit of the doubt, right? Now, although a lot of the other cloud computing companies have been struggling, right? We've been seeing a lot of the earnings, again, Coop, just recently, many others like that, that stuff been struggling a little bit, right? They've been struggling, right? And weirdly, so we got Adobe. Adobe got earnings this week as well. That's going to be a big one, right? I'm still in the lab on that one, right? I'm still doing some research on Adobe. But I tell you what, I also like Kroger, right? Kroger is another one that I've been watching as well. So really quick here, let me come over here. I want to show y'all something really quick here too. And yeah, shout out to everybody that's maybe tuning in. Thank y'all for sharing, subscribing to the build today. Thank you for being, again, constant, supporters of, our channel here. I say our channel because it is, right, with the University of doers and thinkers, right? And we want to have a place where we can come kick our feet up and talk our talk, right? Speak our speech, right? And it's all about definitely, looking at this market and trying to better our investment prowess, right? Our financial literacy prowess, right? So really quick, I'm going to show y'all this real quick here. Let's go here. Let's go here. And let's go back over to Black Box real quick. Let's go back over here because I want to pull up the option scanner of Black Box to show you exactly, again, a lot of people use different things to kind of, figure out, where the money may or may not be. Of course, y'all know I'm a big, advocate of Black Box, been with the company since 2017, and have definitely benefited from watching the company grow, the platform grow itself. So anywhere you can have a tool that helps your trading become more proficient, I'm all for it, right? It more than pays for itself. I can assure you, all the money that we was able to clip today from the market then definitely paid for my Black Box and then some for the entire year. So that's how I look at it, right? A dime that's worth $1, right? A dime worth of payment that's worth $1 worth of gains, right? We'll look at it that way, right? So really quick, we'll look at Oracle real quick on the back end of the day, just on GP, just to see, what the market may be thinking about in terms of even the options market for Oracle, right? And many others, right? This just off the cuff here. This wasn't even planned. Right? Even though we're selling off into the close here with Oracle here, of course, you see how I was struggling to get back above the VWAP, the 20 and the 50 here. That's what I have up on my Black Box here. And since then, we've definitely broken all of those lanes and we're downtrending to the downside. And of course, this is a broader market sentiment pullback too. We're down 4% on the SPY. So you can imagine a lot of these other stocks, especially on the tech side, they're hurting too. I think about the Nasdaq. The Nasdaq is almost down 5% right now. The Nasdaq is down 4.9%. So Oracle, all that tech stuff, they've been in trouble anyway. Why? Because yields are surging, right? Now look over here to the far right here. See right here? All this is new 52-week lows for Oracle right now. 100% 52-week lows for Oracle. So yeah, this is uncharted territory for them. The last time they've been at around these prices, right? It was these prices right here, these prices right here, right? Goes back all the way to what? March of 2021. That was the last time Oracle was sitting at around $64, $63 a share, right? So yeah, they made a round trip ticket, coming, into 2021. If you want to use that kind of, as the marquee perspective there, it was trending at around again, $59, $60 a share, at around $62, $62 a share. And we've done 100% round trip ticket since then. And so granted, there is a level of support at around that area. Granted, I would be remiss of me not to kind of, accept that, there are some moments at around that area where, there are some traders, holding the line there, as you see, around $61 a share. Nice little support area there. We had a rounded bottom there, fry pan bottom, kind of consolidate there. Then it broke out and went higher. But again, we're up against another tranche of different headwinds, right? So again, Oracle definitely is going to have to bring it on the revenue side of things. They're going to have to bring it on the guidance side of things. They're going to have to, really, prove that their cloud business is much better than a lot of other cloud, companies out there, right? And so whatever, right? No harm, no foul. So real quick, let's look at the options here and just kind of show you a little bit how, when we're talking about investor sentiment, what are the broader market, gods, if you will, or what are they thinking? This is the natural flow chart as of today for Oracle and Oracle only. Now look at this here on an aggregate level. Of course, in the very beginning of the market, of course, you can see why people are buying a lot of calls, right? They got earnings tonight. We had that massive flush down, around about 10:30 for the SPY, and then the market caught a bounce. The Nasdaq caught a bounce, or tech caught a bounce, and literally right after that, guess what? Call buys start coming in. Couldn't make this stuff up. See, 1027, $70 calls, $70 calls, $77 calls, right? Some of these even got time on this one here. Goes out to what? July, right? This one here goes out to what? September. $65 call there, 88,000 there, 16,000 there, 15,000 there, another 70,000, $70 call strike here, 33,000 there, right? They were playing for that bounce, right? And the market took, basically, if you will, all right, let me scroll it over here. If you will, it took Oracle back up towards around about what, $65 and what, 30 some odd cents. That's as far as they got on the daily, right? In terms of, intraday bounce. Now I opened up, of course, a little higher than that, but after it sold off and bounced, it only got as high as what, 65.36. So whatever little money they was that eke out on those calls, if they didn't sell those, they're hoping that obviously earnings were paying out and they get bailed out, right? They're hoping that the earnings bail them out. And then I would say going into 11, into 12, look at the puts that was coming in. Look at the puts that were coming in. Some of them actually got size, 46,000, 65, 65,000, 101,000, 75,000 there. Again, 68, 40,000, 21,000, 23,000. This is all the people just putting on massive weight and puts. Now, whether it was day trading or not, but some of these also got what? Time frames well into what? Next month, July. There's one for 18,000 there, right? You got a few more call buys that came in around that 3 o'clock area because people were trying to buy the power hour bounce. Turns out it didn't work. Or they might just say, maybe I still think the market's going to give them a favorable lifeline, and they get bailed out for earnings. They may just put up good numbers. Right? But as of now, into the close here, look, the put buys are coming back in, 96,000 there, 61,000. So again, having tools like this is useful. I guess that's my whole talking point here. Having tools to help you get a gauge on the market sentiment, is really helpful. Why? Because we are in uncharted territories given the macro headwinds that are keeping the market from just really going back crap crazy. And because of that, organic data, organic revenue, organic, growth has to count for something. The fundamentals have to matter is my point, right? Another 18,000 just came in right there, basically 19,000 of the 58 puts just came on the blotter as we were talking at, 356, 30 seconds in, $19,000 value of puts for 58 strike are still coming in for Oracle. So again, little stuff like this again. So, this shouldn't necessarily sway you to buy puts. I'm just saying, do your other due diligence on top of that, but having tools to help you navigate if you are an options trader or just a person who's actively day trading, tools like this really help you out. And you will say, well, okay, why are you going in on Black Box today, brother? You rather just really go hard for Black Box. Why? Because they actually got a good promotion going on right now too. And I like that promotion where they're going to literally give you the ability to have the mobile app. You get a trial month on the mobile app for only $30, right? They got a trial going on right now for Black Box. I have my link down in the description box. I'll post it again in the back chat. If you are avid trader, of course, this is for people who are avid traders who got the money to pay for these kind of tools. You can now utilize, the mobile. They just upgraded the mobile app actually, and you'll have access to some of the same stuff I'm using here. So it's only $30 a month. Again, if you're able to kind of read it properly, it'll pay for itself for that first month trial, right? And I'm just saying, this is just one of the things that I use as well to help my trading. So again, whatever you use, of course, I could do this stuff organically too, because y'all know this ain't ain't nothing to us, because we run right over to our favorite website, right? Our favorite free website, that is, which is y'all already know what it is, right? Barchart.com. And guess what? Free 99, right? Free 99, right? Or you can use your brokers, right? Your brokerage app has the same kind of parameters, right? That you can use as well to help you navigate through these different flow charts, flow chains, whatever, right? So as of right now, let's see what the put to call ratio looks like on Oracle. Would you look at there? Would you look at there? Boy, you talking about somebody about some puts, right? You talking about somebody buying some puts. Look at that put to call ratio. For every 3 puts, only 1 call being bought. Somebody feeling very cocky. Now that could be very dangerous too, because market makers are desperate. Boy, they are desperate right now. Worst thing can happen, they just send the market nowhere. Do a big old IV crush and hurt everybody. Send it up 3 points, pull it back 3 points, run it back up, maybe 1.5 points, and leave everybody kind of stuck. We've been seeing that a lot lately in earnings. Why? Because they got very optimistic, thinking that the market was going to feed off of the idea of a rate hike pause in September, and they'll get through the idea of thinking that a lot of the other economic data falls inflationary and then was going to come down, and they did not. They did not. Right? So we got 1 minute here before the bell, guys. 1 minute before the bell. right? 1 minute here before the bell, guys. So before we close out here, this Monday session, we got a nice little surge until the close here. We got seconds before the bell rings here. We got roughly 8 seconds here before the bell, guys. 5, 4, 3, 2, 1. All right, there's your bell, guys. There it is. This day is in the books on the intraday side, that is. Hope you guys benefited from it, right? I hope it was a great session for you as it was for me. So what better moment, in my opinion, to have a small intermission, I guess we will, intermission break here and give you some of that latest, what they call good game, right? That good game that we put out in terms of our, fun moments in the market. And this, we got a new clip for you guys, right? We got a new clip for you guys today, right? Again, just given the fact that we're getting ready to go into the FOMC, so we're ready. And we just want to pay homage to being able to make good decisions and get a bag. So with that being said, let's roll some of that beautiful bean footage. All right, there it is, right? There it is. All right. It's time to get hedged. It's time to get, you know, it's time to get what they call strategied up, right? It's time to get, due diligence up, right? It's time to get discipline up, right? You got to put on, your, on your thinking cap, as they say back in the old day, put on your thinking cap, right? You got to put on your 10-4 kufi, all that too. Got to put on everything, right? Because you're going to be dealing with a lot of, mass hysteria as to people who may or may not have ever seen a market kind of go through the level of, fluctuation that we're seeing here. A lot of this stuff is new to a lot of traders because a lot of these people just came on the scene during COVID, right? They came on the map during the quarantine pandemic value, whatever education they was able to get thus far. I hope it's been able to serve them well. I hope it was honest and constructive in a way where it wasn't all about just, throwing people, fish and not necessarily teach them how to fish. That could be very catastrophic for the people who are headset or headstrong and trying to prove the market wrong when the market is telling you don't, fight the feds or don't fight against the trend, and you're going against that and getting run over, then, only you and you only are to blame for that. And so, it's tragic, but, we understand the values of what this market is here for, right? We understand the value of risk, right? Risk mitigation, right? And right now, Oracle is ripping. So Oracle was able to successfully come in and I guess beat their numbers. And so right now, that little put that I had is dead money, right? It is dead money. So as an Oracle now sitting up around about $68 here, a share is squeezing higher. So they must have came in pretty well and did what they needed to do to make Wall Street happy enough at least to say, you know what, the bottom is in as of now, right? They hit their 52-week low today several times all throughout the day, and they got pretty much caught a bid on the back end of all that bad, publicity thus far. I guess whatever the fact falls to acquisition that they made must have worked out for them, where they're saying, okay, well, we'll give you the benefit of the doubt. Now, I don't know if they did it in the buybacks because it was pretty much obvious that they couldn't do buyback given they just made this acquisition. But if they had any more money left out there or, on the books and they added a buyback as well, we'll get those numbers and figure out what that looks like as well, right? So as of now, Oracle is ripping, right? So that little buck, I think I spent about $1.20, $1.30 for that little trade. Yeah, it's not even really much, about $1 and some change for that. Right now, that there's kaput right at this point. All right, so we'll see how the market holds up into the back end of the after hour session here, whether or not Oracle can definitely hold its gains. As of now, the SPY, again, in itself, it is trying to, fight back again above that, 375 region. And so we're closing kind of what I thought, maybe above 375. That was my initial, target. I kind of put that out there early, so it was no secret there for you guys. I was selling you 375. It's the area that we're looking to see hold at least, we say until the close, but more so, seeing how the market can finish out even during the after hour session, that would be more of a conviction value. Now, they will still have to get through the futures market tonight. They still have to get through, all the different, sessions, the Asian session, the London session, where they have to get through all those different things before we figure out whether or not the market will have any follow through for us tomorrow. All right. But as of now, of course, the market is in, somewhat, in a, I don't even want to call it a safe space, right? They're doing better than what they were literally 15 minutes ago, right? We'll just say that, right? And we'll see how well the market is going to, fare on the back nine of the of the after hour session, right? What's going on over, Chris? You see you popped in the building. Peace, power, and profit to you as well, right? Peace, power, and profit to over Chris in the building, man. How was your day?
Peace, power, and profit, Oba. Everything was good. Today was more of a chill and relaxed day. Kind of mad I didn't get no puts on SPY. I was trying to put some in too this morning too, boy, and they would not feel it. So it's all good. You still get to study and look at the market and see what's going on and, read news headlines and see what's going on in the economy. So there's other ways you can be, productive if you're not trading or you don't get to trade. You know what I'm saying? You can still just sit on the sidelines and just, be a spectator. But I did buy me some Oracle calls though, so I got to squeeze me some calls in for Oracle.
Let me get that chart up right now. I was trying to get it up to us. I said, man, let me get this up. Because as you see here, guys, that we just talked about here, it played out that 52-week low and put a lot of risk out there. And again, I just looking at some of the numbers coming in here. They beat on revenue. I think around about what they came in at 5.9 billion, and they had an estimate about 5.4 billion. So they beat, they beat their, roughly, granted about near half a billion, right? So that's good on revenue, definitely. Given the fact that again, we're talking about cloud computing here, and the fact that again they just closed out, this big old, acquisition that they just did here recently, that just went on their books. So that bode well for any value of the revenue stream. That's going to be, a great tailwind going forward, given the fact that we can get through all this other stuff, right? So as of now, that looks good, right? I haven't checked the EPS quite yet. But I get to those things. I'm pretty sure I get more data on that. But I'm definitely interested in what the guidance is going to look like too, because the guidance is going to be very instrumental, right? Because y'all know what I know. These guidances have been what, that's been the hangnail for a lot of companies, right?
Facts.
Right.
So I mean, it's safe right now, but just I think
definitely.
we all know it can be up right now, and then it's a different story in another hour or two. So
man, this market is brutal, but no, I like the strength. At least this 15. This is in the 5 minute, I guess I should say. Excuse me. That 5 minute candle is definitely strong. That's a big bullish engulfing candle here on the 5 minute. Not like a lot of just indiscriminate, kind of short, buy, stop, buy, stop, buy, stop. They just kind of really, just really sent it, and so that forced a lot of short sellers to cover who were definitely trying to short it. Now again, upon further review, we'll see what comes from the conference call. They can definitely, speak to the value of that, because again, 5.9 billion as opposed to 5.4, that's notable. Again, we're talking about billions, and we're talking about a marketplace that's definitely reeling for what? For a value of consistency growth value, at least I should say, granted, and they kind of spoke a weak guidance coming into this quarter, right? So I was definitely using that as a thesis as well, part of my, my game plan. And just given the tech sector was weak too. Again, it was more of a lotto, right? Because I didn't do anything special. I did one. Literally, it cost me only $1.30. So that's $130, right? I didn't do nothing crazy, right? Yeah. I only had that level of conviction when I just really, really, delved deep into my science kit, right? We did that with Stitch Fix, right? We killed Stitch Fix like that in Oracle. I'm not Oracle, but excuse me, DocuSign.
Absolutely.
Yeah, so but this one here was definitely $1.30 lotto on the ticket based upon, again, some of those ancillary things.
Mm-hmm. I was trying to squeeze in some puts too, but unfortunately, they didn't fill them. So
yeah, I'm saying the market guards, let's say, hey, you good. And again, for me, of course, it was just, I had put this trade on earlier, so I even had a chance to close it out. I was up on it literally like $100, right? I could have easily took that 100, because it was basically near 100% at that point. I only paid like $100.
Absolutely.
So I could have took that and be like, you know what, I'm fine. But I put it on with the risk management, risk assessment value for it going into what its earnings print.
Right.
So I had no qualms about that. Now, if it would have dumped and put up maybe like $150% or 200%, I would have definitely took it, right? Just being honest with myself, because I know how I am with that, especially with these, you playing into earnings. So as of now, this looks good for Oracle, again, being able to kind of eke out that value on a rev. Like I said, I'm pretty sure EPS. Let me see. I'm trying to find it. I know. Let me see what they had put out on EPS. And that was just pretty much the only notable one for today into earnings, right? So they had report short-term deferred revenue of 8.4. So that's interesting. So operating cash flow at 9.5 billion during the 12. So that's interesting. So again, that's what I was talking about, falls that cash flow, because they just closed out that that latest acquisition. I got some company called Share or something. I got to pull it back up. But anyway, it wasn't necessarily in any kind of weird material impact on that value of the revenue, and so they was able to increase a little bit better on their infrastructure value far as cloud, the cloud business. Given the fact that some of the more weaker companies that deal in the cloud space, they got pretty much ran out of town. And I think that's what I was looking at too earlier. I was like, some of these cloud computing companies are going to consolidate, and only some of the bigger dogs going to be able to kind of eat, right? Because it becomes a game of best in breed, right? Everybody just can't eat from the Fed cheap money. You have to be a company who's more well founded. And so we saw a lot of companies losing business because of they're starting to crunch numbers, right? I saw that with App 11. App 11 was a great read on that because they did a lot of they do a lot of the marketing and the AdSense value or the ad revenue liaison for a lot of these bigger corporate companies like Google, Facebook, Snapchat. And it showed even within their report exactly what Snapchat will look like, Facebook will look like, Google will look like, whether they were spending, through them to kind of attract, ad customers, right? So the same could be said for like places like Oracle. Like I said, we spoke about, some of the other ones out there in that lane, like Apollo or whatever. Splunk, Workday. We saw a lot of those guys. We saw Salesforce. Benioff, right? The known pumper, right? That's what they call him, the known pumper. But a lot of those guys, they were just hit or miss, right? Splunk, because we spoke about Splunk, of course, Okta, Coop, a lot of those were just hit or miss. And then, even though DocuSign is not necessarily in that space, but they somewhat are because they are online value of a cloud security, signature service, right? Database in that, business through way of being able to, construct, if you will, know the Republic from an online perspective. You see what I'm saying? And so, ancillary, but yet still they did a deal with Microsoft, a partnership, small, it wasn't big. It was a small partnership with Microsoft before their earnings, and it still didn't help, in terms of DocuSign, right? Because a lot of other companies already do that, right? Adobe already offers that. Another company, I think Helio something, they offer it, right? And so again, using that as just a way of saying a lot of these companies starting to consolidate, meaning big money hedge funds that are already second wind, they're going to more founded, places, right? They're going to some of these companies that got bigger moats, who already got, time in the game. And they're just, they're doing business with those guys, right? So for whatever it's worth, we'll see how long it lasts before some of these smaller companies get a chance to really eat again, or where they may settle or may not settle. Will be interesting going into the back end of the year when we start saying, what's the damage, right? After we, they done scorched the earth of all these companies that were just benefiting out cheap money, and the feds and did their job. We'll see what's left, right? All right, like Stitch Fix, right? Stitch Fix was at $120, man. Literally, about 7-8 months ago, somewhere around there.
Yep.
And now the stock's sitting at $5 a share, right? Again, Teladoc, all the stocks like that, I mean, ether, right? They just got ether, right? So, a lot of people just, whatever. I gotta buy it because Kathy Wood bought some more. Man, look, don't you be following Kathy right now,
Yeah.
right?
Wow.
Woo, boy, she taking a beating. And she's still doubling down on some crazy incendiary calls. She just did her latest call for that Zoom, but she came out and said Zoom was going to be worth like $1,500 by 2026. $1,500 by 2026 Zoom.
That's crazy.
Woo, boy. I'm just saying, I don't know what she,
I don't know what she looking at. She must know something we don't know.
She must be on that powder, boy. She must be on that baby formula powder. Like Cat Williams and back up, like you must be on that powder or something. Goodness, man, because but hey, a lot of people who've been reluctant to follow her thus far, man, I can only just imagine what well, they holding some serious bags. I'll just say that they holding some bags. I ain't no other nice way to say it. They holding some major bags, and I hope it gets better before it gets worse, because if you still factor in the next quarter worth of data that's going to come out, again, given the fact that we still got Russia, we still got, matter of fact, we got more ratcheting up of China versus Taiwan. That's picking up. That's also what spooked the market today more, right? It happened over the weekend. China, pretty much came out and threatened the U.S.
Did you hear about the truckers going on strike in
South Korea? Yeah, right. That's another one, because think about all the goods that come out of South Korea that come into America, right? Y'all know they got Samsung over there. They got a lot of stuff, right?
Yeah.
I mean, I know it's the truckers, but still, you think about just, what that does to a lot of these companies in terms of, inventory value. Same thing that a lot of the other companies dealing with in the U.S. Either over inventory or not enough, whatever. And if they demand value for what they have is not, I guess ramped up, they're in trouble, right? So it's a lot still going on in this market, man. That's just woo-woo, right? It's nowhere near the all clear, no matter how much they try to signal that, they got a handle on this stuff. I just don't see it, right? I don't see it. And that's just being, neutral as possible. Again, it's not necessarily having an implicit bias, because I don't. Clearly don't even move in that likeness where I would have people even take such a hard stance on terms of being, again, ahead of all this macro data, because again, I don't have half the tools that the quant fund managers and Steve like that have in their office, but we're doing the best what we got, based upon just stuff we can find off the internet, right? And we've been doing pretty well. We rather toot our own horn and pat ourselves on the back, but we've been doing quite well. And I can say we've been saving some people a lot of money from just trying to get, overly excited about, S&P 500 460. Right? Literally, I still got that screenshot, or not even the screenshot, but also that pin of the all-time high for the year. I'm not taking it down until we overtake that 462. I said that's the top for the year, and lo and behold, we're still sitting at below 462, right? And so that's gonna be our marquee. Like, yep, we were like, this is it, bro. This is all y'all getting here. This is it.
I remember you asked us too. Do we think that would it hit 480 or 500?
Yeah, we had training sets around that stuff. Like,
I'm like, oh man, some stuff is just too much, man. It's like, no, bro, we not doing that. S&P 500 ain't hitting 500. No, I didn't do so.
Man, there was a lot of people that went in on that too. Just think about that, on that bounce coming out the 410, the first one, that 410 bounce when we got the whole Russia scenario. Yeah. And they caught the market and swung it back to the upside somewhat, in short order fashion, and people got excited. Oh, we're back, right? We sticking it to Putin, bro. Tariffs, this, and sanctions this, sanctions that. The world started the domino effect of sanctioning Russia, and Russia was like, okay, right, all right, right.
Made them more rich, actually.
It did, by all intents and purposes. Turned around, everybody put sanctions on Russia, boomerang daggered themselves. All of these nations doing horrible right now. Every nation that put on sanctions against Russia is doing horrible right now. Go figure. And this is not me rooting for, it's not even about that. We're investors, right? We move on data, right? We'll move off all the stupid stuff, that political, bureaucratic, goofy stuff. We move strictly on data, and the numbers just don't lie. The ruble just rebounded, and again, he was able to forcibly get, the European nation to buy natural gas and oil with Russian rubles. When they first said they wouldn't, they had to bow down and kiss his ring, right? It just couldn't make this stuff up, man. So for what it's worth, we'll see what comes from the, again, on the back end of this stuff, because they don't have anything left. The only thing they got left is embargo. That's the last chip that they can play. And I think at this point, Russia has proven to be very resilient, because a lot of their neighboring countries geologically, right? Guess what? Or geographically, excuse me. They're starting to do business with Russia at a high level, and they're getting cheap oil, all that they can carry, because Russia don't have to worry about dealing with all the other nations that tried to pretty much sanction them, right? Think about India. India, happy to buy Russian oil and rubles, right? And then get much as they want at a cheaper price, right? And again, China, many others, whatever, some of the African nations, y'all know South Africa pushed back against sanctioning Russia.
Right?
Yep. So America mad about that. They mad because South Africa ain't standing with them, right? Go figure, right? You already know, Iraq and Iran definitely gonna side with them, right? Because they're part of the OPEC, brotherhood, right? So this is just pretty much an obvious scenario where you just like, okay, hey, it just made it worse for all of us, right? We're the ones huffing paint right now, right? Because we got bad management, bad leadership. So anyway, what's going on, Over Sunny? Over Sunny in the building. I want make sure I get to you. What's going on, man? Peace, power, profit to you. How was your day?
Nothing much, just chilling. Just came back from my lunch break. How you doing?
Man, holding it down, man. Happy to have you guys in the building, man. Just going through this old crazy Monday, manic Monday, money Monday, right? Did you do anything today in the markets, or just kind of did a little bit, recon?
Oh, I did. I'm off my discipline. So shoot, I've been on it since early. Well, actually, to be honest, last Friday I did my trades, and then coming into today, and then I did trades today, um, moving forward based on how the market was running today. So I was doing a lot of um, tactical analysis more than anything, just based on my trades for going on towards the future. But it worked out tremendously. But yeah, I loved it. I did. The only thing is, I want to be on the page of where, not saying that I want to trade the market on how it is now, but I don't want to say that I'm doing great based on how the market is running, because I know how the market is running. I want to be on the page of where, when the market is level and I'm able to come up with the same ideas and the same methods, and it works the same way. You get what I'm saying?
Facts. And that's a part of regimen, right? You got to go through a timeline of what the ideal of what we consider to be what back testing, right? Every strategy has to have a value of what, recordation of where, you were in a particular, scenario or place, and the market, however the market responded during that time, under what value of fundamental or technical, value, how you responded there provides a level of memory, right? In terms of the buyers or sellers that were at or in or during that time frame. So if you ever come back to that area, if you leave it and come back to that area, chances are you were thinking that you'll have the same sentiment of those traders who are at or around that spot, right? The whole ideal of what we consider say, well, in terms of back testing, that's the importance of it, because it teaches you, just like you said, it's discipline, right? It's discipline to sit patient, or to, I guess, recon a scenario where say, oh, okay, I was here before. This is how the traders responded, at around this level. This is how I traded at around this level, right? First time I didn't do so well. This time I'm ready for them, right? That's that kind of reality, right? But ultimately, you'll figure out, how to become more consistent. And like you said, with making sure that whatever your goal is, or your end target, your entry value, that you honor that, that scenario. Like today, I did it with my the call buys I bought, right, on the swing after the market, dumped and hit the low of 375 and change. I wrote them jokers right on up 380, sold one, held one, took my stop loss, from 374 to 3750, and let it do as it's made. Because the easy close it out for the, for a nice two lot, game value, but kind of got in at the low anyway, so it was no harm, no foul. But I'm just sticking to your thesis and letting the market do what it's going to do, right? And a lot of this is a moment where the market is very, again, even though we've seen these levels before, but there's still a lot of level of ambiguity in terms of traders, right? Because now you're trading more investor sentiment, more so than the idea of the technicals or the fundamental value of it, alone, right? People are capitulating, essentially, right? Some people are, not all, right? We hadn't had that major capitulation that most people, have yet to see or witness in their trading career when it gets really ugly. We're talking about them nasty flush downs where the market would just, maybe down like 200-300 points for 100. Next thing you know, you get a nasty flush down out of nowhere, and we just dump instantly, down like 700-800 points. And then it just keeps dumping, right? You go into like a limit down, right? They have to halt the market literally from volatility, right? That's crazy. I don't know if you guys ever been in the limit down. I know you've been around a little bit, Chris. You experienced that on the SPY. Man, that's something that just throw your head for a loop.
Be honest, like that's kind of why, like, every time when I do trade, or I make sure that when it's in the motion, I get SPY puts, like in the future, so it'll be on the page of where, if the market does happen to do that, then I'll be ready and I already have something on deck. You get what I'm saying?
What's
But
called
if
duration.
not, I gotta always take it out. I could always get it while it's green. It might not be too far like ahead of the money, but as long as I can get my 20%, I'm always on that page.
Right. Again, it's just a game of duration. It's a time sensitive value, especially when you're trading options, right? And a lot of this stuff that you can map, in relation to that of the fundamental news that may be out there, you're trading towards those those readouts, right? Those data points, so to speak. Right. Now, bid you again ahead of that, bid you kind of behind that, either way, if you put on risk, you're putting on that risk, and that's to say, well, I think, for the most part, given these these signals, these moving averages, this level of outflow, this level of maybe inflow for that particular, level of strike price, it'll give you the conviction you need to put that trade on. Right. Because every time I do like a swing trade, I use that same thesis over and over, like it's, like it's a brand new day, right? This is a new chunk of trades I have to deal with, even though I've seen this level before, I've seen this energy before, but you just don't know how traders are going to react, given, what we're up against today, right? Some people hit their threshold. Some people already had, hit margin calls. Just imagine today, I can only imagine how many people got margin calls today. Like man, tons of them. Right, you put on swing calls on the back end of Friday because we had a nasty kind of day where you would think, okay, maybe we should get a bounce because on some of the smaller, shorter term time frame, we were definitely oversold. We would do for at least a bounce towards 393. That's what a lot of the talking heads were talking about. Listen, on CNBC and other, and they were like, yeah, we should maybe get a bounce back towards 391, 393. And some people actually put on probably positions thinking that may come into fruition, and they woke up to a nasty gap down around about 2.4%. That's ugly, right? That's ugly, right? If they bought Cummins at around some of those areas too, even as opposed to option trading, they were just down massively this morning, massively, right? And so that's just a part of the game, man. It's just, you got to know how to have yourself, or like you'll speak about, you got to be balanced, right? You got to have, a good put to call ratio, right? I do a lot of, 1 up, 2 down, 2 down, 1 up, whatever the scenario is. And then there's sometimes I just go heavy on one direction of bias when I just know a lot of the momentum in terms of the trend is saturated towards that direction, right? But mind you, I'm not putting it on at, inopportune times of the day. I'm doing it right when I have major pivots, mapped out, right? Either support or resistance. I'm at those peak to trough scenarios, right? Then I can mitigate my risk better there, right? It's just a part of the discipline that comes with it too. But I think you're getting it, brother. Brother Sonny, over Sonny, you started to make, a lot of make up a lot of ground, and learning how to just do just that, and it gets better with time. Definitely. Definitely.
Well, I learned a lot from y'all. I mean, that's being honest. Like, it might not be where I say certain things, but like even certain methods that you might be talking about, or things that you might be saying on how you approach a certain situation, and you just talking about what you did in that situation. But I might take that method and just try to apply it somewhere else. So I do that with a lot of things. Even when I listen to people on programs or stuff like that, you know, just taking different methods, applying it, trying it out. Even when with the paper trading, trying it out on there, because now they have options on the paper trading, just seeing how it works. When you start realizing how it works, like now, like this week, I've been doing well. Since coming into this week, I've been doing good because I started realizing more. I lose more money doing it out of the money. When I start doing the same, using my tactical analysis and doing things in the money, you start making more money versus being on the page of doing it out of the money, because you have to wait longer, and then when you wait longer, your theta gets ate up. So it makes a big difference. And I was just doing it wrong on that page. So sometimes it just takes for you to have to practice, use different people's methods. You know what I'm saying? Just really listen.
It's part of the game, the application, right? and figuring out, what's the best optimum, strategy that you can put forth, right? Given, all that the market is trying to initially signal to you, and what you can or cannot potentially accomplish given, if all those things check out. Because again, it ain't hard to buy $5, $5, $10 here. Same way we buy gas sometimes indiscriminately, right? $20 here, $30 here. This thing, we start getting up towards 100. Then you say, okay, well, this should get me what? Get me more for less, right? It's the ideal I get more for less with 100, right? Because I can get, let's say an asset like SPY, especially if you got like a 2-day out expiration value on a midweek expiration, and you buying it for Monday, well, at least you got a day worth of what? Performance in that midday or that Tuesday or whatever you're looking at from that perspective that you can work with, right? And so you say to yourself, okay, yeah, definitely I want to buy, potentially closer to the money at that point, because if I get in the direction of bias in my favor, that's going to really, really increase my premium take, right? Or, help your delta at least. And it's just small things you learn when you're trading options. You're getting better at understanding how options work, right? Because, I'm a big proponent of always telling you again, go down your checklist, your what, why, where, and when. If you feel, conflicted or not convicted about a particular scenario, if you don't know enough, you don't have to chance it, because again, it adds up, right? It will add up. 5 here, 10 here, 20 here, 30 here, right? And so you need things to really align themselves to give you such an opportunity. But again, like I say, everybody goes through it at some point of being able to kind of, narrow down exactly what, what pretty much will help them become better at being more strategic in how they put that trade on. Again, having an entry in place, having an exit in place. So every time I put on a trade, I've already got an exit in mind. All right. And so if I put it on, I share with you guys, instantly I follow up with here's my particular target I'm looking to get. So that way it'd be no, question of whether I'm just doing, is he guessing? No, here's my target, guys, right? If I get there, boom, I'm doing this or that, right? And I make that very conscious effort to do that every single time. If I put something out to the general public, so that way it won't be as if, again, I'm just, out there just throwing trades out there, whatever. Because a lot of people, sometimes they get caught up in, just that, right? Now, I know I came on and spoke about even with Oracle, but I gave you my reason for Oracle, right? This is a lot of them. But for the stuff that I put on strategically, I got, I took time to put the trades on. You best believe you're going to get the full bang, right? Here's why I put the trade on, right? Basically, whatever. Here's my exit, my strategy, right? I'm trying to get out of it, right? And that comes through discipline. So it comes when you get more, more experience in, knowing exactly how to mitigate risk better, right? So every dollar counts. So I've been on this little small piece of chain, or a little piece of chain for a little small. I'm messing up. A little piece of chain for Something Strange campaign for a good little minute now, right? I think I started doing it maybe a little after Q3, Q4 2020. I think that's when I was telling y'all I'm finna start this little campaign and showing people how to do a little, work with less to get more. And I really hadn't stopped since then, right? Because a lot of that time I was putting on a lot of big trades before then, whatever. I go up, $400-500 on the contract, $600 on the contract. Since then, I just been doing, everything literally under maybe $200 max. So a lot of stuff I've been putting on been like $20, 60, 70, 100 under that. I'm just letting them, work, and that's being able to kind of map out a good directional bias, and so, that's a little area of my skill set that I'm working on even for myself, right? Just showing that, I got to have range in this, because most people got big money. It ain't hard to put on, in the money or a deep in the money trade with a stock that's obviously, coming off the bottom of a pit or hitting the point of a supply zone resistance. And you saying, okay, well, I can put that risk on knowing that I'm already at a ceiling, or I'm near the floor at least. And I'll, accept, whatever value of a stop loss I could put on it. But yeah, you got a more intrinsic data delta, to work with in terms of value at that point, given time. So not hard once you understand the basis of trading options. So again, whatever. But we're excited for that. We're gonna keep working on that stuff. So you don't have to worry. Every moment that we get that we can add value to you guys during the training sessions with those kind of talking points, we're gonna speak to them. right? We're going to speak to them, and we're going to try to make it make sense as much as possible. Right. So shout out to you again in that. Shout out to Oprah Chris. Shout out to everybody who, who are out there, willfully, really putting on some good, strategic goggles to kind of figure out how to get some money out this market. Right there, brother Jermaine today, he definitely did well. He was kind of the same way, spending, he playing, a little piece of change for a little something strange campaign in his own right, and he did well. I think he put on a swing trade coming out of Friday as well, kind of following a lot of that stuff that we were talking about too and doing. And I think he closed out $300-400 today, and spent only like $40-50, something like that. So little stuff like that, you're like, man, that's exciting to see those guys being able to do that, and him having a conviction to put on that trade and kind of to speak to why he put on that trade. Not so much I just put on the trade because of this, right? So shout out to him. And everybody today who's profited off the market, right? So I'm excited. So yeah, everybody in the back chat on the YouTube, again, you guys know how this stuff works, right? Right? It's definitely community university value here that we're trying to put forth. If you got questions about particular stocks, particular value or strategy that you're working on, you want to share, or you want to ask questions about, don't hesitate, post it in the back chat. Let us kind of parse through it, right? Hit us up in the groups, whatever. Let us help, help each other in that regard too. All right. So that's about it, guys. So again, just giving the value of what we got, going into Wednesday. We do know now tomorrow is a doozy too. I got to speak to that because y'all know we got another big fundamental calendar date tomorrow too. You guys happen to know what we got going on tomorrow by any chance on the economic calendar?
Is PPI tomorrow?
PPI. Right, that's that one there because that's the one that really determined the earnings, right? That determined the earnings of the company, right? The CPI pretty much forward in line to that of the consumer, right? It's what's called the consumer price index. The PPI is a producer price index that models the value of the earning plays, right? The earning values of what these companies, the EPS, right? And how well they position on a forward PE, right? On a trailing PE, whatever. If they're kind of overpriced or underpriced, based upon the cost of goods and services that it's going to cost the manufacturer or distribute, from a wholesale manufacturing perspective, right? The raw cost of the wood or the steel or the lunar that they got to pay for before they even fashion into the item that they're going to turn around and sell to the the reseller, right? The reseller, right? So those numbers are very important, right? And just come, from a base case perspective, just dealing with the CPI, right? Those are carrying costs that companies like a Walmart or a Kroger or Oracle, whatever, they have to pass on to the consumer, or they may not be in a position to because they don't have pricing power, or the market may be too sensitive to the point where their customer base can't afford that carrying cost, and companies will try to eat that, which also hurts their margins. So the PPI is very important, right? Very important. So really quick here, let's run over there real quick here and see exactly what, the estimate is for that tomorrow. Kind of, peeked through it a little bit before, but I just want to share it with the family here and showing you again, these are things that we, these are the lanes that we travel, right? Basically ain't nothing new with us, right? We travel these lanes and, we run to them and not from them. We want to be well-rounded in our, ability to be good stewards of the marketplace, right? Because we want to be around for a long time, right? Again, we want to do this stuff well into our senior years. And I always tell people, learn, everything that you can, now early while you have a passion and a hunger for this. So that way you don't get, burnt out on trying to, roll with one strategy and one way only, and it kill your ability to be a student of the game, right? You got to be a student at all times. You have to be a student at all times because the market is always in teaching mode, right? Always, right? Always, right? So tomorrow, again, yeah. So this is what we got. So we got estimates tomorrow, right? On month over month, around about 6%, right? It's about a 0.2% kicker on this month over month. But here where it get interesting, see right here. Basically the last readout we had 8.8. They're forecasting on this next one 8.6. So they thinking that we're gonna have about a 0.2 negation on the what core PPI on year over year. Right now, that may be more the BLS kind of their prestidigitation, right? Their sleight of hands cooking the book, because again, just given the fact that what we got on CPI, that's still carrot value, right? What the consumers had to eat on the value of producer prices being able to pass that stuff on to consumer. So, that may be a stretch, but again, this is a slightly different metric they pull from, because again, we're talking about what wholesale distribution value of it, right? Because they get a bigger deal, of course, as a wholesaler, distributor, manufacturer, than it is for the consumer anyway, right? Because we got all the markup costs that we get, but they get, to buy things in bulk. But again, a lot of the stuff that they're buying are still somewhat expensive right now. Look at the raw cost of goods, commodities right now. Some of them have come down, granted, like lumber and I think rough rice and sugar, coffee, oat, some of that stuff. But not everything, right? Metals are still somewhat fluctuating. Of course, we already know energy, right? Which is the ubiquitous glue for all values that's dealing with any kind of form of manufacturing, because you need energy to power the machines to even to cut the wood, right? So energy is always ubiquitous, right? That's why energy costs of the oil is always in a position where it's trying to stay bullish right now. But that's also a carrying cost that you have to factor into the PPI too, regardless of what they manufacture, what they distribute, whatever, right? So that's what we're talking about for as that carrying cost, and how well this this marries towards these companies EPS is at this point, going into Q3 value at some point. All right, so that's going to be interesting. So 8.6 is the estimate. We got a readout of 8.8 last time. The year-over-year value in terms of just base PPI is at 10.9, and it was 11% last time. So only negation about 0.1% value on that. So these numbers are kind of right in line, right? Now interesting because they got the base case PPI, right, at estimate of 0.5, but they got the month-over-month value of it at 0.8. So you got an increase there, right? So on the core side, you have a negation, small, but excuse me, I should say increase on the core PPI month-over-month, but on the core PPI year-over-year is down slightly. Same thing with the regular PPI year-over-year month. Right, so we'll see. Right, again, it looks like they're trying to really fine-tooth comb the estimates, but we'll see. But just given what we got for the CPI, I think these numbers here are going to be very interesting. Right, beyond them maybe being in a position where they can better their estimates than they were able to do with the CPI, right? Which was an ugly miss on that, which we knew was going to happen, but they just tried to downplay it, like, oh, we hit peak inflation. We hit peak inflation back in April, like whatever. Like they didn't fool me, right? My puts would definitely agree, right? Because they paid out. All right, but anyway, so those are going to be very important data points tomorrow. We also got a red book readout tomorrow as well, so that will be interesting as well. We'll see what that entails as well. We also got a 52-week bill auction tomorrow too. I think we did some ones and threes today, right? So that'll be interesting seeing. Those things right there are not necessarily groundbreaking, right? The 52-week bill auction scenario, but it just kind of signal a little bit more of what we already know for the bond market. So it'd be interesting to see what that looks like, right? And we also have a crude oil stock weekly API readout tomorrow as well. That's pretty much on the back end of the day though, right? So, but yeah, that core PPI, very interesting. We'll be watching that. Where the OPEC monthly report comes out 7 a.m. in the morning as well. On NFIB, small business optimism sentiment, readout. That stuff ain't that important, but the OPEC one is pretty decent important, right? So we will be watching that, right? Just in case, we're just kind of seeing what with the oil market, maybe saying for in terms of the OPEC, that kind of band of oil marauders, what they're thinking about for output capacity. They've already kind of pretty much let everybody know that they were still trying to stick to their main script of the level of output that they already have on the table. They sticking with it. They're not doing any extra unless something come about. So that's pretty much that. And oil is up right now, of course, after it kind of pulled back early on, but it's still rebounding and eked out of a positive game here on the back end. So that tells you a whole lot about oil debating. We're just moving up every 10 point value and just making a new support. So everything above $120 now is new support. And the longer it stays up there, that's problematic for equities. Why? Because you're talking about energy prices, one of the biggest costs. It ain't abating. It is not. So that's just setting up for that next run up towards what? Back towards that 130 area. Right? If we break above 130, it's lights off, mask on, right? Move silent. That could be very, very problematic for all these old dovish people who saying inflation is peaking and all that. Like, from what planet y'all making that call from? All right, so that's that. So PPI tomorrow, 8:30 in the morning. So you may get a little bounce if the numbers come with in line. Right? If they come in line, definitely you should get a nice little bounce in the SPY. Why? Because number one, we're already somewhat oversold in some of the smaller time frames. And the market just can use a stay of reprieve going into Wednesday, which is Fed day, right? FOMC Fed day, which we kind of already basing that we should get a 50 basis point hike. But here's the crazy part. Everybody now throwing around 75 bips, right? 0.75 bips. And that could be, again, something that possibly, may happen. As much as people may want to write it off, I wouldn't necessarily write that off quite yet. Because that last CPI data readout made Janet Yellen and Jerome Powell look very foolish because they've been the biggest two cheerleaders holding up, doing what they need to do to fight inflation, which is hurting the American people, it's hurting Joe Biden's poll numbers even more, so much so that, again, it's going to ruin his, even the ideal of him, having any kind of success in the primary for the Democrat. That's going to make it that much more harder for them to accept these people as smart, competent people in fixing this inflation, because they had the chance to get ahead of it early and they chose not to. See, that's how that stuff works, right? You don't get a chance to come back from this, right? And that's problematic. That's problematic for them, right? So, yeah, Wall Street, of course, they want to have their cake and eat it too. They've been, upset because that haven't been the case recently, and that's why you got such a volatile market as well, right? So again, I'm comfortable, I'm patient, and I'm not moved or basically unnerved a little bit about what's going on. We're just doing what we're supposed to do. We're checking the data points, we're checking the charts over and over and over and again, and then we're letting things happen, before us as they're supposed to, right? So again, real quick here, let's run over to the charts one more time here. One more again, right? Because we got to put some respect on our charting skills, because boy, we've been hitting this thing like crazy, but we've been spot on. That's all I'm gonna say. We've been spot on, right? And again, rarely do we toot our own horn, but I just got to, man, we've been spot on. All right, so really quick, let's go to the daily real quick here, as we kind of somewhat get ready to wrap up in a little while here. Let's look at this real quick on the daily here. All right, let me pull my volume down a little bit here. Volume bar there, that is. All right, so every level thus far on the way down, we've been very, I mean, almost pinpoint accuracy in being able to plan a plot around those areas, right? Of course, the last one was the 416. It was no mistaken, why, it was very problematic. The market could not break above 416 and close above it with strength. All I need to see was like 1 or 2 days, 3 was the max for me, right? That did it, because this was the day was supposed to make it happen, and it did not, right? It again, it pushed above it with some strength. We got up above like 417, and they pretty much brought it back down towards that back down toward the trend line, and then they held it again going into that next day around 417 and change, only to gap it down the next day. That was problematic. I said, all right, weakness here. All right, so I started putting on what they call short-term, durational puts into the value of the CPI numbers, right? Into the value of, the market having, a conflict value at that 416 resistance, because everybody had loaded the boat on 420s, right? The option flow chart had 420s saturated with what? Call buyers. Like all the people just buying 420s, then they were buying 430s. They were just going ballistic. The longer we stayed around 416, 417, pivoting around there towards 415, they got more and more confident the bottom was in. Because that's all they kept hearing on CNBC, Bloomberg, Fox Business, some of the other. The bottom is in, bro. The bottom is in, bro. What are you tripping? The bottom is in. I'm like, whoa, Nelly. Whoa. Like, whoa. Okay. My puts say different. And they definitely said different, right? And they hit different too, because they paid out, phenomenally, because of the fact that clearly they didn't have enough of a driving force to take the market to 420 resistance and close above that, which would have really shown a very bullish signal ahead of the CPI. All right. So they didn't need the market to leak the CPI data, which everybody's saying what happened, to cause people to feel apprehensive about trading the market at around 416, 417, 415 region, that we may get a breakout. It just didn't materialize. It wasn't there. Right? I was checking the flow chart like everybody else. It just was not there. Right. So yeah, no harm, no foul. That was, somewhat of a good trade for us, right? Easily. And we've benefited thus far. So right now, again, we're right back into that, find our next, 10-point channel, and let's just play off that. Right. Let's just play off that. So right now, we're working with what, if you will, top line resistance around 386, about 386 and a half. And then bottom line is around about what? 375, 80-ish, somewhere around there, give or take. So roughly around 376 to what? 386. That's our next 10-point channel. Y'all hearing it here first, right? Not that y'all already can do this, but y'all hearing it here first, right? This is your next window here, right? So matter of fact, let me just do this here. Let me do it now, I should say. Let's just draw a little circle here, right? So that way in the future, when we come back and visit this here, obviously, by Wednesday or whatever, we'll have an understanding why we are, playing around this little channel here. So everything on the lower band, however you assess your risk, that's risk, risk value, risk mitigation, do what's necessary until we break that, controllably and close below it, and build our next 5 to 10-point window to the downside. We'll play what the markets are going to offer us there, right? Short-term resistance, of course, short-term pseudo resistance, 379.50, 379.60, somewhere around there, right? Give or take, right? Basically near 380. But anywhere from 379.50 to 380, that's short-term pseudo resistance, as you see with my dotted hash lines here, right? Anything, above that is, you got a wick here. Of course, going back, on May 20th here, everything in this side is just air and opportunity. If you want to get very, meticulous about that, just come back and look at all the chop zone here, right? That chop zone area within here, you contend with all that resistance there, trying to push back to the upside, right? As you can see, that's why you got a little top side resistance around about, 386, 387 region, somewhere around there, right? So we'll keep an eye on that. But as of now, that's what I'm looking at for as top side short-term resistance, not the pseudo resistance, but the short-term, 10-point channel resistance, 386, right around about 386 and change, right here. And then from that, of course, everything from that point will be mapped out for us, 389, 390, back towards, up towards 395, 396 region, right? So that would be the top side. Like that would be like if you have a good PPI print, and the market was able to close, let's say tomorrow, a little bit of maybe over maybe like 377, 380-ish. 380 would be, ideal. If you close above 380 and you get a good PPI print, be it they cook the books or whatever, or just numbers just good, right? You can easily see the market rally back towards that 390 region, right? And possibly, try to take out, maybe up towards what 392, 395, 396 region. Right? Maybe not all in one day, but maybe a continuation from what Wednesday into Thursday. Right. So we'll keep an eye on that as well. But for now, we'll play what we got. All right. RSI sits at 32.38 on the daily. Still more room to the downside if that's the case. Shorter time frames going to obviously show what? More what? Of an oversold, right? 4 hours sitting at 24 RSI. Definitely showing oversold. Due for a bounce on the 4 hour. You already know the 1 hour going to be, just as ugly, right? 17 on the RSI on the 1 hour, clearly, right? And then, obviously on and on from there. So the daily and the weekly, those are the ones you definitely want to watch. Why? Because if we are still in this somewhat of an ugly bear market downtrend and the PPI data comes in bad, just like the CPI did, guess what? Even though we're sitting at 32.45 on the RSI, we can easily take that under 30. Like I said before, last time we've been at or around below 30 was going back on what? March 2020, right? Back during the COVID lows. This PPI value and the Fed's, scenario this Wednesday. Look, if they can't speak a good game, right, to cool the markets, we can definitely take out a 30 RSI, right, on the SPY. And that'll put us, again, at around 368, give or take 363 region, right? Easily, right? Matter of fact, I need to go through my band. I did it on my Webull. I need to do it right here, right now, right? That can easily take us down towards this 363 area, right? Right. So just keep that in mind. Those are some levels to kind of keep on your radar. You put them on the weekly or the daily chart, whatever you use. I do it across different time frames. Those are my levels. All our levels here, again, thus far have been spot on. I gotta say that. I just gotta say that. Sometimes having directional bias intraday could be different because you still got to play with these wild algos, but our levels and pivots, they've been spot on, right? They've been spot on, right? And I just got to say that, right? So yeah, those are levels to watch, guys. So keep that in mind. Just turns of the SPY. Most everything that's correlated to it, you already know what to do as far as that, as far as QQQs, whatever. Too. Yeah, go ahead. Somebody like this. Go ahead, over.
Oh no, I was just agreeing with what you were saying.
Yeah, again, these little levels, it matters, man. Put them pivot points on,
right?
And let the market work for you. That's how I look at it. And then for us, it's just, in this kind of level of what nuttiness, right? When we've been witnessing all this kind of volatility. This is one of the best things you can do and learn as a trader at this point is learn how to quiet the noise of the market, right?
Mm-hmm.
How to deafen the noise, because beyond the value that we know that the fundamental stores is actually taking precedence again, when before they overruled a lot of the fundamental news and just rolled off with a lot of technical. Now that script has been reversed, right? And the headwinds, the macro headwinds of the fundamentals are static at this point. We know that they're there. Right now, you're just saying, okay, what are the areas that we're gonna possibly take out, right, or trade into, giving more people get stopped out or capitulate, whatever, because they're frustrated, right?
Mm-hmm.
That's what the levels do for you at this point. You put those levels in play, and you let the market work for you, right? So, yeah, if you need a little help with refining your levels and your pivot points, your peak to trough, your support resistance, again, hit us up. Let us help you out, right? Let us help you out, right? So that's what we're here for as a band of brothers and sisters, right? As they say, right?
Absolutely.
So that's it. So yeah, y'all got anything else, guys, before we get out of here? Over Chris, you got a chart and any kind of stocks y'all looking at over Sunny and in the back chat? You got anything y'all want to look at before we get out of here?
No, just that that Oracle, and I think he was talking about Kroger's too, huh?
Yeah, Kroger's one that I definitely like because again, they are unique. They are pure play on grocery, and they mid-tier grocery store. They have high end and middle class and an admixture of so-called quote unquote low income shoppers, and they have a good footprint. and they have pricing power because we're talking about consumer staples more so than what the admixture of what discretionary and staples.
Yep.
Make sense? Totally different than Walmart. Totally
Yep.
different than Target.
Yep.
100% pure play on brand recognition and the fact that again they have great pricing power because these are what these are staple items, right? Staple items that you're going to brick and mortar to get those items. You don't like Pepsi, right? Pepsi is more often than what definitely what the producer, distributor of what consumer staples,
Consumer
right?
staple, yeah.
But you don't go to Pepsi headquarters
And
to
get
buy
their
Pepsi,
products, yeah.
right? See what I'm saying? Right? It's a difference, right? So for them, it's fuel costs and all this stuff to get it into their warehouses, before they send it out to distribution. Kroger has what revolving foot traffic every day, all day, because you got to go get your groceries, right?
Absolutely.
Right, and you get FOMO into buying extra stuff when you ain't got extra money, but you like, man, I'm gonna get this pack of cookies, man. It's probably gonna be broke next week. I'm gonna buy it now. Pack of butter cookies here on the way out the door here. I wouldn't even want to buy that. So you got to factor that in your assessment value in that. Now, and I know they got some headwind like everybody because they still got to deal with fuel costs, getting no trucks to bring the stuff and all that. We know it's there, but again, like a lot of these other, companies who spoke to the ideal of the staple. Value of their businesses, those things seem to show pretty well. They bowled well. Even with Costco, they just got hurt again on the discretionary items that they got in there, right? Like Costco got what lawnmowers in there. Like, man, nobody look, right? Right? That just sucked all their grocery money because they got to pay for that. They had that stuff on the shelves or wherever, right? So you paying for all that shelf space. So that sucks,
losing
Kroger
money.
Don't have that problem. So
right.
So definitely got my eyes on Kroger in the earnings, me personally, especially, of course, more so on the call side, and it may be more of a head scenario if it goes down, given that, how we kind of fare out of the, Tuesday, Wednesday scenario here. But again, they pull back, pretty decent here. Real quick, I'll just do this real quick since we're speaking to that, because I've been doing a little research on Kroger a little bit over the weekend too.
Okay.
And
I'm okay with it falling in price too. I'm just gonna pick up some more shares.
Facts. I would say because even more so, they get a little cheaper. That's one that you can definitely tell yourself, okay, well, knowing how they were able to weather this, this scenario, that's a stock that's well worth being inside of a growth portfolio, right? Why? Because you're talking about groceries. And so if you look at, just in this short window here that they have on earning whisper here, when Kroger bottomed out around about 32, 31, I remember like yesterday going into 2021, after that, it was just like, okay, out of there, right? We got up as high like 62, 60, somewhere around there, 63 bucks a share on Kroger, right? 61 somewhere around there. And we've pulled back since because of broader market sentiment, right? Kroger got beat down. Costco got beat down. That hurt Kroger indiscriminately. Walmart got beat down. That hurt Kroger indiscriminately. Target got beat down. That hurt Kroger indiscriminately, right? But Kroger obviously has something that they don't have. What is that? They have pure play on grocery, right? Pure play. Right? Them little flowers out there, man, don't even worry about those flowers. They can plant them in the backyard and won't even lose no money off them. Right? Can't say that's a discretionary bill or tax. That ain't the case. So it's straight groceries, right?
Yep.
So the only thing they got to worry about is what fuel cost value, and supply value, right? If they can keep their shelves, full, right? But if you look right here, look, you got a short-term arrow because that's what broader market sentiment, right? But intermediate term price. Now, I don't mean that these are 100% buy. These are sentiment gauges to show you, from the latest readout, some of the stuff that consumers are or when I say consumer, I mean investors are looking at, right? And analysts. Intermediate term price up, investor sentiment up, earnings estimate up, long-term price value up. Why? Because again, we're talking about all those things that are great hedges against inflationary moments, right? And you say where are defensive plays? Ubiquitous items that have normal than average use case. Well, how often do people go buy groceries? Well, as fast as they can deplete what they already have. If they money already not stressed as long as they used to be, that means they're taking actually more trips to the grocery store than average.
Mm-hmm.
Unfortunately, because they're scared. They don't know how to, they want to go boat, but they like, man, if I go boat, I might get caught with a crazy energy bill next month. I gotta play as I play, right? Play as I play, whatever. Play as I whatever.
Kroger got the gas too.
Yep, I'm gonna say some of those brick and mortars, they do have gas stations right on in them too. So they get a chance to feed off that gas value too.
Yeah.
Right. I know a lot of ones, especially in the South, like Atlanta, Savannah, Georgia, man. That went off. I think went off of what road were they? That's not Habersham. Is it Albuquerque? They got one off over there, like near the historical area of Savannah. I love shopping at that one. They got a nice park across street from it. But very nice. They have a little vegan restaurant next to it. But that one don't even have gas attached to it. But that one there is stay packed.
Right.
But like for most Kroger, like I say, on average. But when I'm visiting down south, whatever, the Krogers do really well in the South, right?
Yeah,
that's kind of like their marquee grocery store down there.
Yeah. So
I got my eye on them again. Like I say, just looking at the growth value here, these are expected values that they're supposed to churn out this quarter. You got a 4.1% annual revenue kicker.
Yeah.
Again, coming off that value, the previous annual earnings value there. You kind of see that they still are kind of in line in the growth perspective in terms of the earnings. The expected annual value sitting at about 3.1. Granted, we're dealing with a lot of these other headwind factors too, but that's still growth, right? Same thing with expected annual earnings value, right? Still sitting there around about break even or in line to that of what the previous one, and that's good, right? If you maintain or even do better than your expected value at this point, and you're a consumer staple again, that's at least that bodes well for us analysts, right? It's still up for the market to kind of determine that, because they'll still punish you even just because, but they'll turn around and still say, but this is food, bro, right? This is a consumer staple. So even if it does pull back a little bit, or for what value, if it does, at some point, it's still going to become a flight to safety, because we're talking about consumer staples, kind of being really only a few places you can hide out in the market right now because of everything being blown up. Right. So again, I like them for that reason too. Expected quarterly earnings are supposed to be up, right? So again, that's some I look forward to seeing right there, because again, you're talking about a nice little kicker there, right? 7.1% quarterly value there. That's that margin value there, to be honest. Them being able to kind of get a little extra out of their grocery. All right, we just did the data past Friday when I went over to that CPI stuff.
Mm-hmm.
The eggs and food and all that stuff, like 7.1%. That's grocery store, right? That grocery store, bro.
All that stuff going up. Yes, you
paying
more.
Yeah. Right. You either gonna go out there and catch your own fish, or you gonna you gonna buy them that store price.
You gonna pay the prices, boy.
You gotta pay the price to eat, bro. You gonna eat, right? Can't be at the house eating ass sandwiches and buying, yeah. It'd be like a little meme I put up. You gonna have a bed of rice, and you gonna draw a picture of a drum leg and put it on the plate. Like I'm having chicken and rice.
That's tough, boy.
Boy, that chicken sure smell good on that that piece of paper.
That's tough, boy. You have to draw it. You can't even get it physically.
Yeah. So again, just given that, I'm not gonna go deep into it, but we'll do some more. Maybe again, if I go live tomorrow, we'll do a little extra. Matter of fact, theirs is Thursday, so we got a little time. So this will be great, because this will be somewhat PPI tomorrow, which will be good, because this is going to obviously affect Kroger. We're talking about PPI. That stuff goes into producer, stuff like that, distributor stuff to feed into Kroger. And then, of course, we got the Fed FOMC, Wednesday. Yeah. So a lot of the dust going to settle, or we may get some spikes, in between. It'd be interesting, because now it's like a game of how do you play this? Now, granted, Kroger only pulled back 76 cents today, 1.49%. Everything else was down 5%, 6%, 7%, 8%, 20%, 30%. Kroger only lost 1.49 or 1.50% today. 76 cents. You know what I'm saying?
Yeah.
So
Small losses. Everybody else getting
small
the
things for a
brakes beat
journey.
off of them. Yeah.
Exactly. So I mean, little stuff like that. Again, y'all get
I
it.
mean, yep. I mean, I got
So
them long term too, so
yeah,
it's a good
yeah.
long term stock as well.
So again, right now you got a lot of concentration around the 44 puts at around about 2,800 contracts there, and on the call
Mm-hmm.
side, the 55 calls, you got a lot of weight there. You got around about 4,000 contracts came in today alone for the 55 strike, right?
Mm.
And they got them, essentially, man, if you bought them right into the, say for instance, you bought into the close, because that's been the best time to do it when the market settles, right?
Mm-hmm.
They like, as of now, they like 70 cents a contract for that, right? And that's out the money, of course. But if you even playing in the money, they got a 50%, well, excuse me, a 50-cent haircut today, around about 20-cent haircut. So they were roughly sitting around about 260 coming in today. Now they're sitting at around about 210. And I was looking at them, obviously, off and on a little bit throughout the day and doing other stuff, but I was like, I need to see how the market is going to fare, right?
Right.
Typically, I would have swung it from Friday into today, but just given the fact that we got PPI on a Tuesday, which is odd because we had a CPI on a Friday, right? Of all days, right? Just how the calendar fell. Yeah, that's an odd value for me. I was like, okay, I need to get through Monday. After what I saw in the futures, I was like, I got to get through Monday. I just want to wait and give it a little time, right? So I'll be looking at this tomorrow with the PPI data when it comes out and seeing where things lie there. And I may put on a starter position there, right? Of course, may
Okay.
hedge it, but that's just me. Of course, that's just me. In terms of my perspective there, right? My little opinion. That's not investment advice. That's just my opinion.
Right.
Right. So Kroger, and we got Adobe. Adobe's another big banger. Boy, that's gonna be a
Mm-hmm.
banger. That's gonna be a mover. It's already down 60 something points over the last 3 days. It already dropped 60 points, right? So, it might be a
Mm-hmm.
sale like Oracle, right? They just kind of already priced in the drop because Oracle dropped substantially, hit 52-week lows, and then they was able to kind of eke out a little bit better than expected when it came to the revenue, all this, that, and the third, and so. Right, they benefiting from that because again, they are a big dog on the block. They are best in breed, and so best in breed is count for something in some aspects of the tech sector. Even though everything seems to be kind of just left for dead, but there are pockets where people are starting to still prove that this is why they are a name brand entity, right? So again, shout out to Oracle being able to do that after the back, on the back end of that acquisition they just made, and having a good war chest. I mean, they already had cash. Oracle got old money. Ain't no secret there. That 9.5 billion cash flow value is, that says a lot, and that's why they do a lot of stock buybacks because they can only buy, so many companies because they ain't never really a whole lot that really fit within the synergies that they need, within their business model, right? So they're playing a very, I guess, chess kind of reality, if you will, but they also lagging a lot of the new blood. That's weird when you say it that way. They just got more money though. They can weather storms better, and that's what makes them a good player because they just need to do just enough to keep, the books running and the shareholders happy because they got name brand recognition. So, but yeah, so we'll see how that turns out.
Yep.
Again, as they go forward here, into more of a tightening cycle, interest rates still ripping, right? 10 years still ripping. That's still, either way, it's still downside pressure on a lot of tech stock. But for
Mm-hmm.
the night, Oracle eating. That's all that matters. Now they can sell off Friday, Wednesday, whatever. Maybe even tomorrow if it get ugly and the PPI just really mess everybody up again. I don't know. But as of now, RSI is signaling that the market want to catch a bid at least to get a stay of execution, right? They want to catch their breath. So if you get any kind of market sentiment where you get like a small bounce tomorrow, that'll really bode well for Oracle too, right? To even hold their gains or continue moving forward. And we still got to get through course of conference call. I think it just started at 5 o'clock. But as of now, that stock is squeezing up and ripping up a little higher here. So shout out to Oracle. Shout out to you over Chris for taking those swing calls too. I was literally supposed to think about. I thought about hedging too. I was like, you know what? I'm already up like $80 on this trade going to the
Mm-hmm.
close. going to buy a little, little call just on GP. But I, for what it worked, I will say, gratefully, humbly so. I did, so well today. All my swing stuff I put on. I
Right.
was like, all right, I'll risk 100, right? But I didn't made, of course, well over, near $3,000 a day, right? So I was like, I'll risk 100, right? It wasn't a scenario, but I had reason. So it wasn't like just lotto. I'll be honest.
Absolutely.
I was like, I had reasoning. Yeah, I need to see those things coming into play, but that's how you set risk. So that's that. So that's it. So I ain't got nothing else, guys, unless y'all got some, man. But today was a wild day, man. Onto my Joker was sucking, but that Joker was sucking motor oil from 3 a.m. in the morning, 2 a.m. in the morning, all the way to the bed, bro. I saw Joker boy ready to jump off, boy. Woo! It was just getting crazy out there on the social media streets, on the stock side of things, of course. The way the market was just, dumping in the after when the way Bitcoin was coming down, and I ain't even talk about Bitcoin because I don't even want to get in that, open up that can of worms, but because I can say this here, it ain't nothing that we already didn't plan for.
Right.
We had did that we did several, but the latest one we literally said, hey guys, look, this is where we're going. If we break 28,000, it ain't hard. It ain't rocket science, guys. We're going down, right? We're going downtown to 23, right? Easily, right? And I'll do this on the back, on the way out the door, because I ain't gonna get deep, and I'll do that maybe tomorrow if I go live. Because they'll be like, man, talk about it, man. Like, but now y'all, we already talked about this stuff. Y'all was already playing, prepared for this stuff. But really quick, we were already talking about this area here, right? We already had said if we break 28, right? Of course, in this case, it got the hash of 29. The markets are shifted. It'll move your lots. That's a lot in time value chain. But it was like, if we break that, we're going to 23, right? So clear as day, we right at that point there where we hitting that, we ate that candle there. Of course, we ate this candle here. Now the next support is sitting at right where it's at now, right? This next candle is just got right here, right? And this is on the weekly chart. That's why it looks like this. So, of course, if we look at it on the daily, it'll look different. But on the weekly, we got this candle right here. But it's on here a soldier. It's gonna have to hold, because if this candle don't hold, we definitely going down to what 19, right? We're going down, downtown to 19.3, 19.4. Right now on the daily, it looks like this course. That way you can kind of even see on a stepping, well, let me come over here. I'm tripping. Let me bring it up over here. There we go. This is where we're going, and this is what it looks like on the data, and this is why I want to bring attention to it, because you're gonna have some support at around that area, clearly, right? So right here, 22, 22.7, 22.6 support, right? Clearly, you see, it hitting that point right there several times and holding that, holding weight there, right? Wicking off there and everything, right? So it gotta hold at that point. If not, it's gonna run on this next candle here. This next run on candle gonna run you down, flush you down around about 21.3, 21.4, right? If you don't hold there, of course, right, then this is the granddaddy one here that you don't want to lose this candle here if necessary. Now you got mad support there, of course, but you also still in the middle of a lot of bad economic data that's still yet to come out. You got a quantitative tightening, man. Grand Reaper waiting to unleash itself, for the rest of this month into next month. You got, the rate hikes from the Fed that's going to hurt tech even more, which going to consequently hurt Bitcoin even more. Michael Saylor had a margin call at 22 or 23,000. I'm waiting for the news to see whether or not he actually got hit with a margin call. MicroStrategy, he had a hard line margin call at 23,000 and change. We actually went under 23,000 day. I don't know if it hit or if he put on some kind of extra value where he can kind of soften up his margin some more. I had to go look in the detail, but I knew that he had a margin call at around 23,000 for MicroStrategy, and it hit that today. So, I had to go check my Bitcoin, plugs and stuff, but that was interesting. But those are your levels there, guys. It ain't hard to see this here at this point. You got support here, 22 and change, 22.7, 22.6. After that, 21.4, 21.3. After that, man, it can get ugly down to 19.4, right? 19.5, right? So just keep an eye on that. Matter of fact, I'll do a little circle. I'll do it just on GP, right? We'll do a little circle here, right? Circle of trust, right? For Bitcoin, right? Circle of trust. Y'all gonna need jokers to hold or something because that area right there is definitely in play now. All right, so that's your Bitcoin value. Of course, that exacerbated the move to the downside today in the SPY. It was no secret, clearly no secret there. So, that's what it is. It's a domino effect. It's the domino effect, right? So that's about it, guys. So we're ready for tomorrow. Get some rest, get some sleep. Some of you guys again, y'all clean the register out today. Got some nice bread, nice little bank. Now we wait, right? It's like hurry up and wait, right? We're in a hurry up and wait mode now, right? A whole 12 plus hours before we get that CPI data, right? Well, 12 and change, around about 14 plus hours here, 15 plus hours. And we'll see what that comes out to be. If it's anything, again, in line of close, we should get a nice sizable rally back towards at least 380. First level going to be 383. If we crack that and squeeze higher, 385. From there, we may, look, I got to say they may get real, how you say it? They may get really beside themselves, right? And try to run it back up toward 389, right? That's a stretch, but these people greedy and they desperate, right? And they didn't got their teeth kicked in over the last 2 days. So yeah, anything can happen here, right? So just keep your eye on that. So, but those are levels for us tomorrow. For us, the first level gonna be around about 376, 70-ish. After that, maybe around 379 again, which we had trouble around that area today again, multiple times breaking above 379. Of course, whole number 380. After that, you got 381. It gets fine line from that point because it's the way the market has been trading, right? But I would say top line will be around about 382. So just say 382 would be best case. After that, you got blue sky breakout towards 380, 385, 386, back maybe towards 389. If the numbers are great, if was a fifth. All right, we all be drunk, right? As they say in the military, right? So those are areas you want to pay attention to. All right, so that's it, guys. I ain't got anything else, guys. I appreciate the family coming through today on the YouTube side of things. Everybody in the back chat. Open Marquise in the building. I just came over here and seen you. What's going on, family? For the brother, Jay Sumlin in the building too. Shout out to you as well, fam. Shout out to brother Jay Sumlin. Shout out to Open Marquise in the building, right? Good to have him in the house as always, right? The fam coming through. Shout out to our family Elite 6621, right? In the building. Shout out to you as well, right? Definitely, appreciate everybody coming through today. So tomorrow, maybe I get a chance to go live tomorrow and get lucky. I have some training sessions to do early in the morning, and one in midday's time frame. So we'll finish those, pretty decently and have some energy left. I'll come on and we'll do a live, kind of speak to the PPI. Speak to some of the oil values that we talked about for the OPEC data, what that does or what it may or may do to the oil market. As not oil futures are up for now. Again, so we'll see what comes from those data points, and we may can speak to the idea of the FOMC in detail, which that is my goal, is to speak more to that, the hyperbole that you're getting out of Wall Street now about the FOMC, potentially putting on, a back on the table that 0.75 bip rate hike for potentially June, right? And even talking about we may even get one for July. They just throwing around all kind of numbers today. I was like, man, it's crazy, right? But we'll see, right? We will see, right? And we'll move from there. All right, so that's it. So guys, shout out to you all. Like, share, subscribe to the video, guys. Tune in if you're new. Hey, hang out with us, guys. We do this stuff for the fam. It's us. As peers at this. So again, it's a me casa, su casa, right? All this is all for our great, for our benefit, right? And so we appreciate you guys when you can contribute and be a part of this well, right? So that's it, guys. I ain't got anything else, guys. Anything else on the way out the door? Over Chris, over Sonny. You guys got any last parting words before we get out of here? You guys pretty solid for the evening as well.
I'm just soaking up game.
Peace, power, profit, you over. Appreciate you as always. Happy to have you here. Happy that you're able to offer as well, because as much as you probably think you don't, you offer a lot, bro. And that's how you learn to be better at this, because you got to get your hands dirty and your feet dirty. That's how you learn how to be great in the market. That's just how this stuff works, right? It's a lot of applied science and research methodology, but a lot of it is what? Application, because within doing so, you refine your discipline, and you also refine your what? Your due diligence. Simple as that. All right. So stay the course, brother. It's a marathon, not a sprint. Always realize that you'll be well taken care of, years and down the road. All right. So shout out to you. Right. Shout out to you as well, over Chris. Appreciate you 1,000,000% as always. Everybody that tune in. Miss Monica Lamb, the whole crew, right? Over Brandon, Ilba, Angie as well. I mean, everybody, right? The whole crew. Over Rich B, over Brother Mathis, Brother Everything, Brother Ramsey. I mean, everybody came through. Again, Brother Jay Sumlin in building again. Him as well. Make sure I ain't missed anybody. Over Mike. He said him. Who else we got came in? Oh, Brother Iori. Appreciate you as well, Brother Iori. Shout out to our brother Dollar Will. Shout out to our brother Be Humble, right? I missed him earlier. I see him here now. Shout out to Oba Sean. Right. Shout out to him as well. Who else? Did I miss anybody? I think I got everybody. Our brother Yoda, right? Family Yoda. Shout out to him as well. Shout out to everybody, right? So hope you guys have a great day, and we'll see you guys tomorrow, hopefully, right? All right. So we'll close out saying where we always come in, having a little fun, right? Next question. All right, guys. That's it, guys. We catch you guys on the next one, guys. Thank y'all for tuning in. Peace, everybody.
Peace.
Peace, family. Peace.